Hey, Bitcoin wealth builders, Simon Dixon here, and welcome to episode 94 of Bitcoin Hard Talk. It's Friday, and we're going to be going through everything that happened this week in Bitcoin, this week in macro, and this week in geopolitics. And the episode is going to have the overarching theme is the Fed dead? And the answer to that is sort of, and we're going to be going through everything you need to know in order to understand that from both the Bitcoin side and the macro side and the geopolitical side. So in part one, this week in Bitcoin, we're going to be covering more on what happened with formerly known as MicroStrategy, but strategy. Is it possible that it could trade at a discount to Bitcoin, and what are the implications on those that have Bitcoin in self-custody? We're going to be covering that and everything else that happened this week in Bitcoin, including the warnings from Syria and various other things from the central banksters as well. In part two, this week in macro, we're going to be covering whether the Fed is dead and how the US is taking Europe with it. And so if the Fed has vassalized the US, is the US going to be taking Europe with it? And who ultimately is in control? We're going to be covering all of that. And this week in macro, as well as the latest with the EU-US trade deal. Of course, we're not covering the headlines. We're going to be reading between the headlines and following the money. And in part three, we're going to be covering will Trump create peace after the meeting between Putin and the European leaders and everything that happened this week in geopolitics. So we're going to be jumping straight in. For those of you that are new to the show, my name is Simon Dixon. I spent over 2 decades of my life obsessing over the topics of investing, monetary reform, and 14 years in Bitcoin, having spoke at the first Bitcoin conference and wrote the first published book in the world to include Bitcoin. After leaving the Proof of Weapons network, where I had a career with the banksters. And so ever since leaving, I've been helping people prepare for a world of Bitcoin AI and central bank digital currencies. And we've been doing this ever since Bitcoin was $3. And right now, I believe we just passed 118,000.8 or something like that. So without further ado, let's go straight into part one this week in Bitcoin. Right. So as I said, the first thing we've had today is we had the overlords at the Federal Reserve, or the very last meeting that we'll be covering more in the macro section, Jerome Powell, who essentially works for the same people that Trump works for, which is the bank. So they both work for the same people, but one gets to call himself president, the other gets to call himself chairman of the Federal Reserve. And in response to what the overlord at the Federal Reserve, or the fake overlord to the banksters, said at the Federal Reserve meeting, his last meeting as chair was pretty dovish. And so we're going to be discussing more about that in the macro section. But as a result, after Bitcoin's correction from its ultimate high of approximately $123,000, it corrected down to about $112,000, which is a minor blip in the road if you've been following Bitcoin for a while. And upon the news, we had a little intraday surge. And I think we're around about $117 right now at the time of this recording. And that is based upon the dovish, which is the bullish side, comments around the debt-based Ponzi scheme deciding to repackage itself and roll over the debt in order to make as many people in the K-shaped economy further and further away. If you're close to the money printer, you do well. If you own fixed price assets, you do well. Everybody else gets wrecked and closer into debt enslavement. And hopefully those that watch Bitcoin Hard Talk are protecting themselves. But we covered last week all the different flip-flops. We had the Google flip-flop. We had the American Bitcoin Strategic Reserve flip-flop. We had the China flip-flop. And as predicted, I said that while you're getting one piece of news about China, you'll also get the flip-flop, because China and Bitcoin have been flip-flopping all along. And the latest news is that it was alleged that there was going to be not just a ban on Bitcoin exchanges and crypto exchanges and Bitcoin mining, despite the fact that over 20% of the hash power being mined in China, the allegation was that it was reiterating that ownership of Bitcoin and crypto is illegal. And I told you that it flipped and then flopped. And we had the announcement of a stable coin. And since then, this week, CMB International, which is a China company, essentially launched the first 24/7 Bitcoin and crypto trading since we were allegedly told that the exchanges are no longer allowed to operate there. So we now have exchanges, Bitcoin and crypto exchanges in China, when we're told that you're not allowed to have Bitcoin and crypto changes in China. Meanwhile, in the rest of the world, in South America, Central America, and in Latin America region, we had an announcement from Buenos Aires in Argentina, and they're going to be allowing citizens to pay their tax in Bitcoin and crypto. And as exciting as that is, please don't convert your Bitcoin to the shitcoin that you can use to pay your taxes in Argentina, because that is a really bad use of Bitcoin, but it is a step towards Bitcoin as legal tender. They don't care about freeing you and allowing you to own your Bitcoin in self-custody, but they're more than happy to allow you to get your Bitcoin and spend it on taxes while they convert it into the very same currency that they print, debase, and creates hyperinflation that Bitcoin protects you from. Maybe they'll actually end up keeping that Bitcoin eventually, but we'll see how long it takes them and how many people will actually pay their tax in Bitcoin. Interestingly, this was the announcement I got when I worked with the Isle of Man in 2014. When the government wanted to make Bitcoin legal tender, they started with accepting taxes in Bitcoin, got all the Bitcoin communities to come across to the island, until eventually the Bank of England said, if you support this Bitcoin thing, then we will be removing clearing to your island from the central banksters at the Bank of England. I digress. But anyway, in Buenos Aires, in Argentina, you can now buy your tax. You can buy your tax with Bitcoin. Bitcoin accepted here on the government's door. We had announcements from the Winklevoss twins, the amount of IPOs that are happening, where people are going public as Bitcoin or crypto companies on the stock market. There is a lot of activity. The banksters are cashing in, the investment banksters. They are securitizing, they are financializing, and they're trying to part you with your Bitcoin so that you own shares in their companies instead of owning Bitcoin itself. But the Winklevoss twins that were very early to Bitcoin, I remember they got Charlie Schwem, an early Bitcoiner that was part of the Bitcoin Foundation, and one of the early companies, BitInstant, that was allowing people to purchase Bitcoin by facilitating bank transfers to Mt. Gox, which was one of the very early exchanges that went bust in Japan. Well, they bought their first, I think it was 200,000 Bitcoin, working with Charlie Schwem and BitInstant. And I remember, if you've read the book Bitcoin Billionaires, and them sharing the story around how we had paper wallets at the time. There wasn't all these really easy ways to self-custody as there is today with these nice little devices that you can plug into your computer, and you can store your Bitcoin offline and you can secure it with a pin. You used to have to print it onto a piece of paper, get a paper wallet, and then you have to chop it up so that you don't have all of the private key backup codes in one place. And then they would go around all the different states in America and find a different bank to put like this backup of 20 different pieces of paper, and have the world's most sophisticated and probably secure paper wallet for these. I think it was either 100,000 or 200,000 Bitcoins at the time. And I'm sure they're never going to go to the problem of recouping those. But anyway, that was how you used to store on paper wallets. And later they created an exchange called Gemini, after essentially Mark Zuckerberg from the Proof of Weapons Network and Facebook, which creates a backdoor to the NSA to surveil all of our social data and build out what will likely be a social credit score. When he stole their innovation and sued, I think it was settled with Mark Zuckerberg for about $60 million. They went on to look at what their next challenge was, and their next challenge was discovering Bitcoin really early. And later they went on to create an exchange called Gemini. Well, the Winklevoss twins are going to be taking Gemini public on NASDAQ. So they said that they're going to be doing that. And really into the Trump administration, many of those really early companies that I invested in, we had like Coinbase, Robinhood, Exodus, Circle. They're all going public now, and I'm sure that Kraken's going to be going public soon. And so soon you'll be able to own shares in all these different exchanges, and they can go public as well. And Gemini is another one of those. There was also an announcement from Tether. Tether announced that they've appointed the former White House Crypto Council Executive Director. His name was Bo Hines. And Bo Hines is now a strategic investor for the digital assets in US strategy for Tether. So for those of you that don't know, Tether functions outside. It creates a digital dollar. It's the largest stablecoin. It was originally launched upon Bitcoin on a protocol called Omni, which was the first ICO for a protocol called Mastercoin way back in 2013, 2014. And they made a way for people to launch tokens on top of Bitcoin. It was slow and clunky. It was later called Omni. I think it was, then they had Counterparty and various other ones. But one of the early tokens that got traction was Tether. And Tether allowed people to send a digital dollar on top of Bitcoin Omni, where it was, for every token, it was backed by a dollar in a bank. And then that dollar in a bank was lent to the US government to purchase US treasuries, because you don't want to have billions of dollars in a bank account. It took ages to get to billions of dollars initially. It launched around about 2013, 2014. And it was trying to persuade other exchanges, like Kraken, I think, was the first one to accept it. Coinbase wouldn't do it. And it would essentially allow you to get your money off Bitfinex, hand it over to Kraken without having to go via the bank in the middle. Because normally when you take your money off an exchange, you then have to persuade the bank to receive it. You then have to persuade them to send it to another exchange, and all sorts of things can go wrong in the middle with these international transfers. Well, Tether made that digital dollar easy, seamless, and it allowed traders to arbitrage between the price differentials of Bitcoin on one exchange to another. Then Bitstamp started accepting it, another exchange in Europe that I invested in. And eventually you had this easy and seamless way of getting money around. And it was a small market cap. And it was until Binance actually launched as a crypto to crypto exchange, following Poloniex and Bittrex and other crypto to crypto exchanges. But then it started to get such traction, and it didn't have a bank account, that Tether then had was essentially the bank account for Binance. And Binance started doing more and more volume. It went up. CZ, the founder, he left OKX, which was one of the largest exchanges in China, launched the exchange after leaving OKX at a meeting in Chengdu. That was when many of the Bitcoin conferences I used to attend were in China at the time. And he left, launched Binance, and then suddenly the bank account that Tether was using shut down. It was a Taiwanese bank account. And at one stage, they were trying to get all of the money in a hole because they were thinking about withdrawing cash because no bank would receive it. They eventually solved the banking issue, had a few more hurdles in between. But now they are the 18th largest lender to the US government, with approximately $165 billion of market capitalization. Based upon investing it in US government debt-based Ponzi scheme debt, they now receive enough Bitcoin. I think in the first quarter, they received about 8,000 Bitcoin over 2 quarters or something. But they're now more profitable than BlackRock and Citibank, not combined, but individually. So it shows that full reserve banking is more profitable than fractional reserve banking when you rethink it on blockchain-based assets and on top of Bitcoin. Later, it moved over to Ethereum and various other blockchains. But anyway, now it has appointed Bo Hines, who was working for the crypto czar David Sachs, who was appointed by the Trump administration in order to push forward the AI and Bitcoin and crypto strategy. Now, but the David Sachs was one of the original PayPal mafia with Peter Thiel and Elon Musk, and obviously you had this technocratic appointments where Peter Thiel was building the surveillance state through Palantir. Elon Musk was consolidating all the Doge data, taking all of the social data on X, and building out what I think will eventually be a social credit score. With back-end surveillance systems going via Israel through their KYC systems, so that they can build out that surveillance state, combine it with Doge data. And what did Bo Hines and David Sachs do? Well, they didn't do a Bitcoin strategic reserve. In fact, it was announced that we're not sure whether America has 28,000 Bitcoin or 220,000 Bitcoin. The audit hasn't been done yet, but what they did do is they launched a stable coin. So now with stable coins, you can have the surveillance to artificial intelligence technology. You can have the social credit score. You can plug that together with stable coins, and America can back it by their national debt and push over and roll over the debt-based Ponzi scheme. Not save the country with Bitcoin, but roll over with stable coins. And that ties into our whole commentary that we're going to be doing in the macro section around whether the Fed is dead. But can you do a speculative attack on the Fed by Treasury issuing stable coins backed by debt? Well, we've had iterations of that in the past. We've had JFK launched a silver-backed currency issued by Treasury, which later he was assassinated. Abraham Lincoln launched and funded the Civil War by creating the greenback. It didn't have the technology at the time, but Treasury created debt-free money rather than borrowing it through the central bank. And he was also one of those people that had a bit of a battle with whether there should be a central bank or not. And obviously, he faced the same destiny. And the history of central banking is filled with stories like this, including all sorts of interesting stories. If you've read books like The History of Central Banking and the Enslavement of Mankind. And I've covered a lot of this on the blog. Anyway, well, we now know that the US strategy around Tether is probably to embrace. And in case it's going to get confrontational, you hire people that used to work for the White House. You come along, you work for the government for a little bit. You then go and work in the private sector, get paid a lot more. And you can use crony capitalism in order to work with plants like Howard Lutnick that founded Cantor Fitzgerald, that is also custodying much of the treasuries. And so you get this pay-to-play bribe type of environment that you see that is surrounding the dollar and the proof of weapons network. Well, anyway, we don't have a US Bitcoin strategy yet, other than you could hold it in self-custody. And so I suggest you hold it in self-custody because in the past, during the Great Depression of the 1930s, you had a scenario where your gold was seized, and that still hasn't been audited today. And even the gold that is now worth $3,400 is still priced at $42 on the Treasury's balance sheet. Well, anyway, the US Bitcoin strategy is becoming clearer and clearer and clearer, and it doesn't look like a Bitcoin strategic reserve. We shall see. There was a flip-flop. It doesn't look like that's the plan, but it does look like stablecoins, surveillance state, and rolling over the debt-based Ponzi scheme through the fiscal dominance that may end up ending the Fed and turn America into modern monetary theory. We'll be covering more about that in the macro section. But stablecoins seem to be more increasingly likely to be in the mix. This is kind of like, if you look at the Genius Act, there was an allowance for banks to use their reserves at the Fed and collateralize it into a stablecoin. So is there a need for the Fed when you've actually got a stablecoin backed by treasuries? Do they really need to be at the Fed's balance sheet? Well, that's another cornerstone of the Federal Reserve System being chipped away at. Speaking of central banks, the Central Bank of Syria, a complete victim of the proof of weapons network that suffered after the Arab Spring, infiltration, covert wars, colored revolutions, in order to have American interference via their proxy Israel that funded ISIS as they were creating an infiltration. And then you had Russian forces, Iranian forces, and created this ginormous, incredibly complex proxy war that now has had, you know, a Jelani, an ex-ISIS person, rebranded and put on a suit, representing the GCC, the Gulf Cooperation Council, and Turkey interest, while Iran has stepped back and Israel is occupying a massive chunk of that land right now. While it was in all of this uncertainty and all of this fragility, there is a massive territorial battle to colonize through currency. And there was talk about dollarizing, which means you become a puppet for the Federal Reserve. And that was pushed back with local currency. And obviously, it's looking like the GCC, the Gulf countries, are going to be in charge, with Israel occupying a part. And I believe if you watch the geopolitical section, we're moving into the vassalization of Israel into BlackRock and the GCC as this proxy war continues. But the central bank of Syria issued a warning today, and that was essentially saying, or it was earlier this week, that they're warning their citizens against trading or investing in digital currencies such as Bitcoin or others. Now, one of the really interesting things, when the Palestinian cause and the genocide with Israel was coming through, they wanted to cut off everybody from their money as part of the starvation and famine campaign that has now been recognized by the United Nations as an official, the first famine campaign. We'll cover more about that in the geopolitical section. But what they did is because Binance and CZ, basically the Department of Justice in the US took down Binance, CZ negotiated where he was only going to be in prison for 4 months. Later, this, basically CZ kept his shares. He was involved in now getting a deal with the Abu Dhabi investment fund to launch the exchange over from the UAE and Dubai. But part of it during this conflict, Israel wrote to Binance, and as part of the negotiation, the US installed their own compliance team. And so US took over the compliance side because they wanted access to the 270 million data points of all the customers at Binance. This is why you store yours in self-custody. And as part of a weapon of war and starvation, they actually seized and told Binance, you can't accept any withdrawals from anyone from Palestine. And then they started to expand that to Turkey, Syria, Lebanon, and various other regions, all because they didn't own it in self-custody. They even started to bomb the banks in Lebanon because they had a gold-backed financial system that gave people freedom from the central bank of Lebanon, which is a US implant, in order to install a debt-based Ponzi scheme. And that's why they lost all their savings. Well, of course, they don't want that to happen in Syria. They don't want the Syrian people to genuinely be liberated and free. And if that central bank does not find an independent strategy of issuing its own currency, it could be a stable coin, it could be backed by Bitcoin, it could be all sorts of things that they could do with that. It's such a waste of a tragic 14-year civil war that essentially is leading to the vassalization of the next leadership structure based upon the negotiations that come out of this new era within the Middle East. But they stated that Bitcoin and crypto within Syria, quote, they are illegal and not subject to any oversight or protection by the country's financial authorities. So Syrians, they care about you so much, they won't allow you, because they're not authorized by the authority, to own your own Bitcoin, so you can beat the shit out of whatever currency they launch next, and you can free yourself and liberate yourself from the central bank. They need to protect yourself from your own freedom, and they need to be regulated by the authorities to do that. So sadly, the Syrian central bank does not want the Syrians to be liberated, which was the point of central banking in the first place. It was to enslave people through a debt-based Ponzi scheme and fund wars in order to vassalize countries, engage in colonial expeditions, and steal resources, just like America did in Syria right now, where they paid the Kurd proxy in order to guard the oil, created a slush fund for their covert operations, where they could fund ISIS training camps in order to have infiltrations and create these civil wars all around the world that the proof of weapons network does through covert means through deceit and deception. So when Syria is ready to liberate itself from the colonizers, Bitcoin will be there, and the central bank can actually genuinely be created based upon nationalist principles when it is ready. I don't think it is ready yet because, sadly, after 14 years of engineered civil war, it is still being vassalized, and so the central bank needs to protect you from Bitcoin. Now, the other story that I wanted to cover is, of course, the PSYOP in the US in order to part you from your Bitcoin. And of course, they want to get you to own it through shares rather than in self-custody. And so there was a lot of controversy around strategy. Now, look, this is a very emotional subject because they have created, very quickly, round about 2020, 21, 22, can't quite remember the timeline offhand. But suddenly out of nowhere, this Bitcoin god called Michael Saylor came along, and he came up very quickly through the ranks, just like SBF did. And I'm not trying to compare the two because I don't think strategy is doing anything like what SBF was there to do. He was a covert operation for Operation Choke Point 2.0, in my opinion, in order to destabilize the region and allow BlackRock to take over big chunks of the industry based upon a operation with both the SEC and the Federal Reserve, the Gary Genslers and of this world, and the Jerome Powells. Where was it? Okay, yeah. So he came out of nowhere. Again, I'm not making a comparison. I'm not saying he's a scammer, but anybody that is involved in a public company means that you end up with normally about less than 10% of your company and 90% owned by Wall Street and institutional investors and a bunch of retail investors. So if you are in that situation, you are owned by it's the classic vassalization strategy, which is when someone creates a company, you get them to sell equity through Silicon Valley. You then have to bow down to the Silicon Valley agenda of how they think you should run your business in support with whatever you think the strategy is. And if you go public, you end up with more and more shares and majority control by institutional investors. So now you are in the hands of BlackRock, State Street, and Vanguard as your main institutional investors, subject to public reporting requirements, various other constructs. And then if you start using the debt capital markets, you're then subservient to your debtors in front of your equity holders. And so strategy essentially launched a speculative attack on the debt capital markets, the equity capital markets, use this in order to raise as much money, transform their company into a software company, into a Bitcoin treasury company. Now we have over 100 Bitcoin treasury companies, Strategy being the largest. They are approaching 650,000 Bitcoin. They used to be called MicroStrategy, now called Strategy. As I said, when you are in the hands of Wall Street, you're in the hands of Wall Street. And so if the government ever wants those coins as nationalization strategies, they may replace it with a stable coin if they want that Bitcoin. But as America is vassalized, I doubt the government will ever do that. And so this might be a private strategy for accumulating and getting as much Bitcoin in one honeypot. And when all of these other Bitcoin Bitcoin treasury companies, if any of those go into bankruptcy, you can dollarize the claim, keep the upside of Bitcoin, acquire the companies. And I'm sure Wall Street has figured out to do exactly what they did during the 2021 pump and dump cycle with public companies. And again, I'm not saying that, this is what happens as the whole complex builds up. And I've been covering this for a while. And so, no judgment on the person, but when Wall Street wants you, they get you. If they need you to be an asset of theirs, then they can do that either through financialization and securitization. And if they go to the next stage, they can do it through blackmail, whatever. And so this isn't a judgment of character. This is the reality of what Wall Street, Silicon Valley, and the proof of weapons network do. And so as it is now entering into the S&P 500 as one of the, thanks to Bitcoin, the fastest growing company, it started to trade at a massive premium above the value of their Bitcoin. So say it had $20 billion of Bitcoin. At one point, it was over 3 times the value. So the company was valued at over $60 billion, for example. And so this is known as what's MNAV. So it's net, a multiple of net asset value. What is the asset? The asset is Bitcoin. And now, thanks to new accounting processes, is measured as revenue, and therefore you can measure it as yield as well. And then what does strategy do? As rather than just selling shares to buy Bitcoin, it then starts creating more products. And so it says, we're going to have a convertible note where we can attract institutional investors, we can leverage the conversion to equity, or we can have preference. And now we can have where they promise dividends. And now we can have perpetual preference. And so they've now got it where at any time they can raise up to certain limitations, any amount of debt, promising a dividend in order to buy Bitcoin. And so the cap table, the construct of what happens in bankruptcy is getting more and more complicated. Now, there's nothing alarming at this stage, but when it is combined with the whole complex that is being set up, and maybe eventually it starts allowing for different types of banking services or borrowing against your Bitcoin, it is setting up all of these different things. The MNAV and the ability to pay Bitcoin yield may start drying up. And so now what we've seen is it's been correcting closer to a smaller premium above Bitcoin, but it also has to promise dividends. And so those dividends are obviously paid in fiat currency. They're offering 10%, 9%, 8%, 7% on different types of products. And so how do you pay them? Well, one way is to raise finance in order to pay them. Another way is to sell Bitcoin in order to pay them. Another way is to make enough money through the software company to pay them. But the reality is that now they need to be paid. And when you have a dollar liability with a Bitcoin asset and you made a promise that you're never going to sell the Bitcoin, then you're going to have to find another way. So if the software company is not producing enough money and you can't sell your Bitcoin, then all you can do is raise more to pay more, which starts to look very much like the dollar debt-based Ponzi scheme, but to a very lesser extent. If you're raising money through one product in order to pay off dividends in another product, it's getting closer and closer to sketchy. It's nowhere near like that right now, but this is a slow process and slow build-up. And I've been warning everyone, just stick to Bitcoin. If you want to play around with this, make sure it's only a small percentage of your Bitcoin and you know what you're doing and you understand it. But what happens if the MNAV goes below 1? i.e., what if the price, the market capitalization of all the shares are below the value of all of the Bitcoin? Well, that could happen. And this is effectively the premium in the market that is willing to pay in order to gain exposure to Bitcoin via this vehicle called strategy. So if it trades below, you're willing to pay a premium because you could buy Bitcoin or you could buy the Bitcoin ETF. What will it do in order to stabilize that price? Now, this is a very different product to GBTC, which was the trust created by Digital Currency Group and Barry Silbert. But this was the problem. It traded at a discount and a premium. It created an arbitrage, and that arbitrage was then taken advantage of by hedge funds. And those hedge funds were trying to arbitrage the price differential. And then those hedge funds were borrowing in order to arbitrage the price differential. And then you get all of these loans, and that was paying yield for others, and then you had this whole complex being built. Wall Street will do exactly the same. This is all being built, and this deregulation environment that the Trump administration is creating all of the products, all of the stable coins, all borrow against your Bitcoin, everything but Bitcoin strategic reserves in order to get you to put your Bitcoin with them. And so currently there is an MNAV of about 1.58x. This essentially means that the market is paying 58% premium for their Bitcoin. So they could buy the Bitcoin, but they're willing to pay 58% more to have Strategy shares, because Strategy has this ability to raise finance, to buy more Bitcoin and everything that comes with it, and whatever the revenue is worth on their operating business. But what is now 1.58 with a 58% premium was, while Bitcoin was going up, it was once 3.4x MNAV. And so the premium is basically decreased to 1.58. So as Bitcoin was going up, if you bought the shares when it was 3 point whatever, that is, you're losing relative strength to Bitcoin. Now, obviously, where it was outperforming before, it's now underperforming right now. And then there was a little bit of a panic, and people were questioning what this actually means. And so for investors, they're basically now paying $1.58 for every Bitcoin acquired. And Saylor basically sparked a controversy during the last earnings calls because he was revealing that the strategy has revised for MSTR, MicroStrategy. The equity, which he calls an ATM, and the equity ATM, where you're able to borrow money in order to buy Bitcoin, they wanted more flexibility. And so the flexibility in executing its basically capital market strategy is a change from what the original investors were investing in. So there was a promise never to sell the Bitcoin, but there was also some people that were saying, well, if you can't make it through software sales and you can't sell your Bitcoin, then you're going to have to issue more shares and you're going to have to dilute more shares. And this was a breach of promise to some people in their interpretation of how this was presenting themselves. And so by allowing the company to issue more shares, that's what they mean by flexibility. And so you've got, just like Bitcoin has a fixed money supply, Strategy could issue more shares. And this is the fundamental difference between owning shares and owning Bitcoin. With Bitcoin, there is a fixed money supply enforced by maths and code, and the largest distributed supercomputer with nodes backing up all of the transactions and the history. But with MicroStrategy, a company, you can just be diluted. And so if you're a shareholder, if you're shareholder value and you increase you're increasing the financial risk tied to Bitcoin as a result of this. And they've got products that depend upon volatility. And now it's getting increasingly more complex. So this led to a lot of unsophisticated investors or sophisticated investors that were upset that this was a violation of the strategy. So if you look at Strategy right now, it basically owes $8.2 billion of debt. So that may sound a lot, but it's got $73 billion worth of Bitcoin. The price has gone up a bit since I looked at the prices. And it's got a market cap of approximately $95 billion. And so the removal of basically the 2.5x MNAV is a safeguard for equity issuance, which may allow MicroStrategy to sell more shares at a lower valuation. But it's a complicated thing for people to get their head around. And is it a violation of the promise? And what happens if it goes below that? Well, they may say that we need to sell shares. And what was the CFO doing? Bad timing. I'm not sure. Maybe he just decided that he's got another 160,000 shares left. But he sold $20 million worth of shares. Now, whether that's because he wanted to purchase something or whether that's because he thought the timing would be right, but this all coincided with a correction in the price, the MNAV going down, what looked like a violation of strategy, and then the CFO selling their shares. And that created a lot of controversy this week. And so what is the consequence of this MNAV premium collapsing for the stock? And that is the question. And that is what people are speculating about. And it is a question that if you want to engage in answering it, fine. But this is the difference between stocks and Bitcoin. So when the MNAV is high, the flywheel basically spins beautifully. They can raise more and they can buy more Bitcoin. But a high premium allows the company to issue stock at basically a low cost. And then they can quickly acquire more Bitcoin. But you're relying upon human risk. And we're kind of creating what looks like a bit of is fairly transparent, but a black box. But then at the same time, they're not willing to do proof of reserves and publish their wallet addresses. So now you got a lot of trust me, bro, auditability. The audit doesn't come out till a little bit later when it can be tracked in real time. And well, that's good. But when the price drops, which it could drop, because I imagine Wall Street will want to create a pump and dump cycle in order to margin call everyone borrowing against their Bitcoin and do the regulated version of what Celsius did. That then works inversely in reverse as well. Now, it is not risky at this stage, as I said, but you got to keep an eye on this if you are. And I just wanted to do a bit of a deep dive to just help people understand the difference as well. So if Bitcoin drops, then the MNAV starts to collapse potentially at the same time. Then you've got leverage starts to work against you, MicroStrategy. And then that could be combined with other operations, with other treasury companies, in order to basically send the other companies into bankruptcy so they can purchase on the cheap, consolidate more Bitcoin. This is the strategy. The end strategy is what? You don't own as much Bitcoin in self-custody. Across the ETFs and the treasury companies, there's now approximately 17% of the Bitcoin supply held this way. They want that to get up. We resist by not owning it. But even then, you look at who is strategy. Well, have a look at their shareholders. You got one of them is the Norwegian Sovereign Wealth Fund. But as usual, BlackRock holds approximately 5% of strategy. They have an ETF that gives exposure to Bitcoin, different companies. Vanguard, the private company, owns 8% as well. And so you can watch the Bitcoin leverage complex emerge and build. And I'm sure it will be done around the usual strategies that the asset managers use, where you have Wall Street, the investment banks securitizing and financializing. Trump has given the regulations for banks and the retail banks to put Bitcoin on their balance sheet. Then you'll have stable coins that will be connected to treasuries. And then people will be borrowing against their Bitcoin and receiving their stable coins. And I'm sure there will be a pump and dump cycle in order to liquidate and look at, consolidating more Bitcoin. Now, if you are in self-custody, you don't need to worry. Everything is good. And so that's everything I wanted to cover on this week in Bitcoin. What I just wanted to do quickly before we move to part 2 this week in macro, where we're going to be covering exactly what's happening in Europe. And we're going to be showing and demonstrating what power the Fed is losing and answering the question, is the Fed dead? And then in part 3, we're going to be going through the Russia-Ukraine situation, tie this all together into following the money so that we can determine what will happen in the markets, what the markets are saying around the likelihood of peace, or what the markets are doing in reaction. What I wanted to do is I played this video before if you're a long-term watcher of Bitcoin Hard Talk, but I wanted to draw your attention to a blog that I created on my blog, simondixon.com. And it's a completely free guide to self-custody. We've got a video that gives you an overview. And if you read the blog, it gives you a link where you can sign up to a completely free 8-module course that I asked a Bitcoiner that focuses on security and self-custody, the author of Mastering Bitcoin, Andreas Antonopoulos. I asked him to create a course for people who want to learn how to self-custody, where you learn how to back up and how to do it. I want as many people to be taking advantage of Bitcoin and self-custody. So we kind of open sourced it, put it in the Bitcoin Hard Talk membership portal. It's completely free. It's my gift to you. And the only thing we ask in return is that you create a login, and then I'll send you a newsletter each week around everything that you need to know in transitioning to this world of Bitcoin, AI, and central bank digital currencies. So I'm just going to play the video that gives you a flavor, an artificial intelligence video that took some of the videos and gave a little bit of a summary. It's about 7 minutes long. And then I'm going to grab some water. I'll show you the blog post where you can sign up to the Bitcoin Hard Talk membership portal. And I'll be right back of Is the Fed Dead? For part 2 this week in macro. Okay, awesome. I think we're back. I think the technology is back in. We're going to go straight to part 2 this week in macro. We've got a bunch of stuff to cover in the macro. This is going to be the main section where we're going to be covering whether the Fed is dead and whether they're going to take Europe with it if America goes down with the Fed. So let's cover everything that happened this week in macro, and we're going to give you the latest news. So firstly, I want to give a few updates on the impact of tariffs from the data that we know. Now, one of the data points that I was looking at was Berkshire Hathaway. So it's the investment company, one of the major players in the equities proof of weapons network. They published their Q2 results, and they were pretty brutal, to be honest, and they gave us a lot of insight into what's happening as a result of these tariffs. And so their operating earnings had dropped by about 4%. So that's to $11.16 billion. They're holding a lot of cash because they've come out of a large part of their Apple shares. But their net income plunged by nearly approximately 60%. And so Berkshire executives were giving their normal speech, and Warren Buffett and the team were pointing basically that everything is coming down and it's directly due to tariffs. So they pinned everything on their portfolio underperformance due to tariffs. Now, whether we are to believe this or not, it's an important thing for us to data point. I just wanted to push through. But basically, they were saying that their supply chains are disrupted. Now, I've always talked about the whole play with tariffs is to drive the world to BRICS, is to have consolidation of power from SMEs going bankrupt that will be acquired by the large corporate entities, and every supply chain disruption leads to more bankruptcies in small companies that will lead to a flurry of M&A, as well as strategically weakening the dollar so that you get these capital outflows and you can move to this multipolar world order. I personally believe that Trump was installed in order to execute that strategy. And that's why we're having these real challenges with the Fed and the attack on Federal Reserve independence, which is one of the cornerstones of what makes the dollar the dollar. And so anyway, with these tariffs, we've had orders delayed. Initially companies were sucking up the tariff, but eventually they're going to have to pass it on. And essentially it is a tax because the importer, and America is a net importer because they run a trade deficit as well as a fiscal deficit. They spend more than they bring in, and they import more than they export. And so therefore, it is the importing country that normally pays a tariff. Some of it might be borne by the exporter. America's about 70 to 80% services and about 30% goods. So the goods normally relates, the tariffs normally relates to those that are actually producing the goods that are manufactured abroad, or their raw materials that come in. And essentially the 350 billion that has been brought in is a tax on American corporations that will inevitably lead to higher prices. And we shall see. It will take some time to actually see that priced in. But basically, shipments are stuck. They're not sure, insurance premiums are going up. And planning is incredibly hard in this environment because the deadline keeps changing. And you've got another 90-day extension with China after a 90-day extension. And so this is kind of the ever-increasing problem. And the longer it goes, the more vassalization, the more bankruptcy of small companies, and the more consolidation of power. It's kind of like, the COVID and the lockdowns, where you end up consolidating into the tech companies and Amazon versus the retail shops, and you get a lot of volatility. And this can make everything worse, unless you're at the top of the chain. But unless, and that's what we're seeing. But essentially, the dollar weakens is the cost of this policy. And this can lead to a foreign goods price spike. And the idea is that it can increase manufacturing internally, but America doesn't have a strong manufacturing base because it's too expensive to produce these goods internally. And so you probably end up with robotics and artificial intelligence, and then that has employment side effects eventually. So we got this whole cycle to go through. And as a result of that, insurance underwriting took massive losses. And so that increases insurance premiums, makes everything more uncertain, and makes all the problems with the supply chain. So every single Berkshire Hathaway business was feeling the pain, according to this being consolidated in that drop that they in their numbers that they reported. It wasn't one segment that escaped the damage. It was essentially all of this, the different sectors in this portfolio of Berkshire Hathaway. And so this is really the bit that most people don't understand about tariffs. It was framed as a tax on foreigners because foreign countries have been ripping off America. But actually, it's, has the opposite effect. It's basically a tax on the American corporations that leads to inflation in order to rebalance the portfolio, in order to weaken the dollar to have those side effects as well. But they're essentially import taxes paid by American companies over to the American government. Now, that would be interesting if they were balancing their books, but that would lead to a depression because the dollar is debt. And so nothing stops this train, as Lyndon Alden always said. And so you end up with increases in debt, but theft of revenue, and a weakening of the dollar. And that is the net impact, as well as consolidation of power, because you're not actually affecting the trade deficit or the fiscal deficit, because you're still trying to be world reserve currency while weakening the dollar. And so you get this very skewed strategy that's very confusing for most people. But it's not free money from foreign companies and countries. It's the opposite. It's a tax on the American corporations to the government. And so Berkshire was affected, Apple was affected, Nike was affected, and they pay these fees directly. They either lead to higher import costs, and this is an impossible choice that they have to make. You either raise prices and lose customers, which can be demand destruction, because most of the consumption is from the top 10% of Americans because of the K-shaped economy, where the rich are getting richer and the poor are getting poorer. And so you can have demand destruction where those people that can't consume and afford those products don't consume. And so you have to raise your prices in order to do that, and you have to deal with the demand destruction. Or you have to basically cut workers, reduce capacity, or become more efficient and invest in artificial intelligence and robotics. And that's inevitably what many of these companies are going to eventually do. And so the corporate earnings are shrinking as a result, but there is consolidation as well into the top, because the small to medium price enterprise, they're going to be sold in distress. And this is going to create a mountain of mergers and acquisition in the private equity field. And that private equity can also be dumped into your 401k so they can flip it. And obviously, Wall Street and BlackRock and various institutions are going to be playing all of these different parts of the portfolio while they hedge as a volatility within the market manipulation that happens as a result of all these announcements. Now, the market is becoming less prone to these announcements. But what are we getting, the Federal Reserve concerned about right now? Well, what is the Federal Reserve meant to do? Well, obviously, if you're a Bitcoin Hard Talk listener, you know that they work for the banks and the chairman is a puppet for the banks. They meet every 3 months, and the shareholders of the Federal Reserve are the private banks, and they have this cushy mechanism of socializing losses, privatizing gains, giving themselves a lovely dividend. Just having a rejig here, giving themselves a lovely dividend based upon the assets that the Federal Reserve holds, and being able to manipulate interest rates in favor for a strategy for the banks. And they're told Fed independence means that you're doing it for the dual mandate, which is inflation and employment. And so what we're hearing from Jerome Powell, who is going to be retiring in 2026, June next year, is that employment is not a bigger deal or as big a risk as inflation. And so at the previous meetings prior to Trump coming in and creating this theater of both Jerome Powell and Trump, who both work for the banks, because Trump is primarily funded by the banking lobby and the tech lobby. So they have the same boss, but you get to have this fight where they get to blame each other. It weakens the dollar, and it looks like you have a nice MAGA narrative that Trump is taking down the Fed and taking down the banks. But in reality, they both work for the banks, and you get to focus on whatever the narrative is or whatever the agreed strategy is. And so because America is approximately 70 to 80% services, and because the goods and tariffs is kind of these two twin inflationary forces. You got inflation on the goods through tariffs, but you've got the money printing in terms of the service industry. We don't know what the impact of tariffs are on the goods side yet, but we are starting to see inflation, as we covered last week. The PPI, the producer price index, ticked up to about 3.3%. And now annualized, the consumer price index is above 3%. It was 2.7% before. So inflation is going up. And what was it that Jerome Powell was saying before? Where he was saying, we'll work from the data. And we don't believe inflation has been fixed. So there's no justification for cutting rates. The employment numbers seem to be fine. But Trump then suddenly comes along and says, there's $3 billion of fraud. We're going to get the Department of Justice to investigate how this happened at the Federal Reserve and implicating Jerome Powell. And you had that humiliation ritual that we covered in previous episodes, which, again, destabilization of the dollar. But now we get a demonstration that the Fed is not independent. Now, what most people are saying is they're saying, yeah, the Fed isn't independent of the government, and now the government is winning here. But the reality is that the government through lobby works for the banks, and the Fed through shareholding works for the banks. And so it is really the bank's policy. The banks own the Federal Reserve, and the banks are public companies owned by BlackRock. BlackRock is the asset manager that holds the largest shareholding in via State Street, Vanguard, and BlackRock. And so through this mechanism of the proof of weapons network and the power dynamics, because all of these companies are now securitized, financialized, and public, you get this kind of most people thinking the government control the Fed, and therefore there is no Fed independence. That weakens the dollar, as we saw with Powell's speech today. Trump gets his narrative, but really the banks and the proof of weapons network are sitting on top, maximizing for their own vassalization of financing acquisitions and consolidating into the BlackRock portfolio companies at the expense of Main Street over to Wall Street. So basically, Trump is doing the fiscal dominance strategy. Fiscal dominance means that the government is just spending, refinancing the debt. And as it refinances the debt, you're getting basically the tool that the Federal Reserve has, which is the short-term interest rate which is you could correct it And all that does is it gives you the ability to refinance the debt short term, but the long term 10-year loans, 30-year loans are going up. So the cost of actual mortgages, auto loans, credit cards, the real economy is going up, but the government refinancing their debt is going down through fiscal dominance, so you can inflate away the debt. And this leads to massive asset price inflation in real estate, Bitcoin, gold, stocks. But the K-shaped economy gets worse and worse and worse. So essentially, it's more consolidation from small companies into large companies. And that's what you need to follow. Now, because America, the government is subordinate to the proof of weapons network, and the Federal Reserve is owned by the banks, which is subordinate to the proof of weapons network, which is the consolidation of the financial industrial complex, the military industrial complex, the technical industrial complex, the pharmaceutical industrial complex, and all of the consumption industrial complex based upon all the debt and all the credit cards and all the rolling over the debt and the massive consumption on credit cards and debt. You can vassalize all the American people, all the American businesses, and the American government into the proof of weapons network, as well as those that are subordinate to America, which is the vassal states of America, which is UK, Europe, Canada, Australia, and various other dependencies like global South companies that are IMF debt slaves that haven't liberated themselves by working more east rather than America, like Mexico, and various other ones as well that are caught in the middle. And so that whole, obviously, the vassal states of America are also owned by BlackRock, which also has all their own puppet politicians that are printing money through the European Central Bank, the Bank of England, in order to inflate away the value of their debt, have a K-shaped economy where nothing goes to the British people, the European further into the proof of weapons network with BlackRock as the CEO. So what was announced in the trade deal? Well, the big news this week was the US and the European Union came to a trade deal. Now, if this wasn't vassalization, I don't know what is. And now most people will be thinking, yes, America is winning. No, you're negotiating for American companies to steal taxpayer money. And that is exactly what's happening in the European side, the UK side, and they get to beta test all of their police state, their surveillance state, all of the different civil unrest campaigns. You get to beta test them on Europe and UK, while all of the assets across the country, like Thames Water is being bought at distressed in private equity by Blackstone, so they can later go public through JP Morgan and Goldman Sachs, so that it can be just an asset that can be asset stripped into the BlackRock portfolio. And they don't need to care about water because it's no longer a national interest. It's just an asset to be asset stripped, sold off, vassalized into the BlackRock portfolio companies and the proof of weapons network. Okay. So basically, what is happening as a result of all of this? Well, the US is becoming more and more isolated. BRICS is becoming, many of these countries with these trade deals are going further east and they're starting to trade with BRICS. BlackRock is invested in the entire global ecosystem, but uses America as a host company for its stock market and the Federal Reserve for printing money for its banks. And so it doesn't care about America anymore. And so you can buy politicians like the Trump administration, get the deregulation environment, and also get the ability for Trump to negotiate for BlackRock, but dress it up as doing it for America. So the strategy, I believe right now, is to turn the European Union and the UK into a toxic asset for complete asset stripping, for the BlackRock portfolio companies to purchase. This is vassalization in motion. What you are seeing in Europe and the UK is what happens when you have this strategy. So what was the European Union and the US trade deal? So let's go through some of the points. So the first was US to impose 15% terms on most EU imports. So importer pays the tax. That is, the corporation needs to increase the price, and it leads to more goods inflation eventually. And that is a tax on the American people. And then the government gets the revenue from it. So that's the first one. The second is US to lower auto tariffs once the EU passes matching tariff cut legislation. So this is to do with the car industry. So whatever tariffs come from the car producing countries, you've got like Volkswagen and various other, mainly affects Germany and some tiny bit of industry left in UK, like Bentleys and luxury cars. And then you get matching tariffs. So you get the same effect as a result of that. So, but whoever imports more is the one that's going to be handing over more money over to the government at the same time as the government printing more money to give to the corporations. What's the third part of it? So from September the 1st, US will apply only most favorable nation tariffs on the European Union. And that's going to affect the aircraft, parts, genetics, the chemical producers, and scarce natural resources. So same impact there as well. The fourth part of it, so, you're going to have this additional import tax upon those resources between the partnership between the European Union and the US. So essentially, US becomes, what am I trying to say? The EU becomes more vassalized and to a host nation for US corporations. Got it. The fourth part as well is that the European Union will eliminate tariffs on all US industrial goods and grant pharmaceutical access for the US. And this also affects their seafood, agriculture. So more specific terms there as well. Now, the European Union says that it's going to buy $750 billion in US liquefied natural gas and oil, and its nuclear products as well. Now, we've covered this in previous episodes, that America can't even produce that amount of LNG and gas. And so it's still European Union, while they're pretending they're sanctioning Russia, is getting a bunch of that from Russia. And there is no substitute for it. So that 750 billion won't happen, but to the extent that it can happen over the next decade or so, basically the European Union, which is completely broke, prints money through the European Central Bank and then has to spend it on US corporations, further vassalizing the EU and the US into those US corporations. The European Union will purchase at least $40 billion in US AI chips, so supporting NVIDIA. So basically negotiating for Chevron, negotiating for ExxonMobil, negotiating for NVIDIA to do more sales by the money printing of the European Central Bank, so that those technocratic states, and you can destroy the manufacturing base of Germany because the LNG and the oil is too expensive relative to what it was from Russia, is, again, further vassalization and bankruptcy of the European Union and the UK into the distressed asset purchases by the Proof of Weapons Network. Now, European Union firms are going to be investing $600 billion in US strategic sectors by 2028. Make that make sense. So a country deep in debt that doesn't have its own resources, with the exception of countries that are not in the European Union, but are in the European Economic Area, the EEA, like Norway, they're not going to be doing it. So how is the European Union, that doesn't have a sovereign wealth fund, going to be investing $600 billion? Well, it's going to be contracts with US corporations so that they can essentially, European Central Bank can print money, steal more money from the Europeans, and prop up the GDP and the stock price of America, which is creating more of the K-shaped economy as well. Enrich those that own stocks, which is the importance of owning assets, at the expense of the European people as well that don't own those stocks, if they don't own those stocks. They said that they'll be exploring cooperation on steel and aluminium markets, aluminum in America, and protections from that as well. So those industries where it's going to be needed. There's going to be a joint commitment to tackle digital trade barriers. The European Union pledges not to adopt a network usage fees. It also said it's going to be considering measures for secure supply chains, including tariff rate quota solutions. And basically, this is the fiscal dominance strategy. America is going to be printing the money, going deeper into a fiscal and trade deficit. It is going to be giving over those revenues that are printed by the European Central Bank and the Bank of England over to BlackRock portfolio companies so that they can further vassalize and strip more and more of the assets. It's only going to get worse for Europe. It's only going to get worse for UK. And they are fully subordinate to the proof of weapons network at the same time as militarizing and taking more and more of the budget of the country in order to purchase more weapons, which is Trump's deal. He's just a salesman for the military-industrial complex so that we can just further enter into an ever-increasing war economy, and we'll be covering more about this into the geopolitics side, how this trade deal does it. Basically, fiscal dominance is the strategy which takes away from some of the tools of monetarism that the Federal Reserve has. And so we're told that it's really important what the Fed does with interest rates in September. And it culminates in this big announcement where the Fed said there's no justification for cutting rates. But suddenly we get a meeting today by Jerome Powell, which will be followed up by a meeting with Trump, where Trump basically gets to say there is no Federal Reserve independence. Jerome Powell capitulated, and he wants him to cut rates, and so therefore he will cut rates. So what does the Federal Reserve have to do once you take away the tool of interest rates? Because the long-term rates are not adjusting. The short-term rates is just about fiscal dominance. It's about refinancing the debt on the short term to roll over the debt, and maybe you'll do it through stablecoins. Maybe you'll do it through all sorts of different tools, but it's being done by Treasury and government, which means it's not being independently done by the Federal Reserve, which was the cornerstone of dollar strength, is the independence of the Federal Reserve from the government. Any other currency that has been vassalized into the proof of weapons network, like Turkey, you have that massive, issues with the currency as a result of not having independence, which was, I think the Turkish central bank got fired by the Erdogan administration like 10 times or something as we went through the IMF's financial weapons of mass destruction, creating the hyperinflationary cycle within Turkey. So at the same time, what did we get? Well, this week, or I think it was earlier this week, we had some fears from the Federal Reserve's reverse repo market. Reverse repo is the short-term borrowing between banks at the Federal Reserve, the overnight borrowing. And it dropped to its lowest level in basically 1,596 days. Remember, we had this reverse repo problems where the market dried up. The banks didn't want to lend to each other on the overnight market. But essentially, the reverse repo market is where institutions, they park their excess cash at the Fed. And so those accounts are drying up. So you don't have the reverse repo excess reserves at the Fed. We're told that the American Treasury is going to be topping up as much of its account at the Fed. And at the same time, we're getting this decrease in Fed independence while liquidity is leaving the market or the reverse repo market, which is essentially the safe parking lot, as it were. And it's flowing elsewhere. Where is that money flowing elsewhere? Well, most likely is leaving reverse repo and buying treasuries into these auctions. So we're draining that tool as well. And this is leading to those long-term yields soaring and going up. It's not yet a crisis at the moment, but we'll keep having to watch this market as well. And basically, the cushion that is held at the Federal Reserve as the lender of last resort is shrinking. And so any shock or trigger into the market could lead to a real squeeze. At the same time as the Genius Act saying you can use your reserves to issue stable coins, which the Treasury can use, so you can take out the reserves there through stable coins. As I said, I'll keep watching all of these different markets, but really the traditional tools of the Fed are dead right now, because whatever you do with short-term rates, it only helps Treasury and fiscal dominance for the government to run the market hot, pump the price of assets in order to roll over the debt-based Ponzi scheme in an environment where there is record fiscal deficits, trade deficits at the highest levels just before the global financial crisis, the dot-com boom and bust, and they are doing whatever they can to roll over that as well. So what did we get today? Well, today was this big meeting where we're told that Jerome Powell is going to hold strong, and Trump is saying, I'm going to get rid of Jerome Powell. He needs to be fired. Well, Jerome Powell did his speech. And what did Jerome Powell do? He caved. And so what does this show? So the majority of the world is saying, see, the governments are in control. The Trump administration is in control. Little do they know that they are subordinate to the proof of weapons network, and the banks chose Trump. He's the chosen one from the financial industrial complex, as well as Jerome Powell, who works for the banks through the Federal Reserve. So the banks basically won, but Trump gets to give the MAGA narrative. The dollar gets to be weakened, and we have independence of the Fed called into question. So the speech today was in stark contrast to the last speech by Jerome Powell, where he's saying the data saying we just don't need to cut rates. We'll continue watching the data. We're concerned about tariffs, he would be saying, and we want to focus on inflation. But what did he say? So quote today, Jerome Powell said the shifting balance of risks may warrant adjusting our policy stance. So it appears that the Fed chair, Powell, is basically setting the stage for basically a September rate cut. Now, it will probably be token. It could be a quarter of a point. It could be 50 basis points. It may be a compromise. Imagine if it was 300 basis points. Basically, that shows no Federal Reserve independence. I'm sure it is negotiated to whatever the strategy is. But basically, the Federal Open Market Committee, the banks, BlackRock, and the financial industrial complex, and Trump are all aligned. And that's why this is happening. And that's why we got pivot in narrative, because Powell is just a puppet for the banks, as is Trump as well. So Powell admitted that basically the economy is weaker. So it was saying, and that was in stark contrast. He was saying the economy is very strong. And inflation is stronger this year than under Trump. It was stronger this year under Trump than under Biden. So that was part of the narrative that was admitted. But it was kind of a narrative that's similar. We'll cover it in the geopolitical section, that kind of Putin said something to appease Trump. He was saying, yeah, the war may not have happened under Trump but it happened under Biden. Putin kind of said that. We'll be covering more in the geopolitical section. As kind of Powell did here, it's kind of showing a little bit of Powell is capitulating to Trump. It's kind of the optics of the humiliation ritual. Meanwhile, what's happening to the dollar? Well, the dollar is being weakened again. And so it had its strengthening cycle. It went above 98, and now it's below the $98 in terms of the DXY. So now we got it below as a result of this. And the end result is, of course, with stable coins, with the Trump administration, with the sophisticated investors that are lending, they're selling US dollars and they're buying fixed assets. So gold went up, Bitcoin went up on this announcement. And basically, Trump is running the economy hot. And it looks like Trump pushes Jerome Powell based upon the office fraud and the humiliation ritual that we covered in previous episodes of Bitcoin Hard Talk. We got more and more announcement that the Department of Justice is going to be planning to investigate the Fed governor this time. So Fed Governor Cook and basically Department of Justice officials are now going to be urging the Fed Chair Powell to remove her. And now there is the potential of 4 seats at the Federal Reserve that Trump can fill and remove this dollar independence of the Federal Reserve. Okay, so in a nutshell, we've basically now got 4 potential seats for Trump to fill, and he can keep filing these fraud claims or tell people to fire, and we can keep getting these humiliation ritual. One of them is Fed member Hammack basically came out and he was saying prior to this announcement from Jerome Powell that looks very dovish, and we'll see what actually happens in September in the end. But he was saying that he does not see the case for the September rate cut. And obviously, there is no case for the September rate cut because inflation is still a problem. So all of this, everything, all roads lead to inflation and the K-shaped economy. That is the strategy. The whole facade of balancing the books, working on trade surpluses, and paying down the debt. As we've always said, you can't do it. You can't do it. So there were some Fed minutes that came out. And what was it saying? It's many saw inflation risk outweighing employment risk. So this is that twin mandate. And so if you're focused on inflation, then you wouldn't reduce rates. But now if you see narratives talking about employment, that might be manipulation of data, which comes to corrections of data in order to justify this fiscal dominant strategy that the Trump administration is saying they want to do. So all in all, the September rate cut is irrelevant. The Fed is dead in terms of this tool. And when they want to use their new tool to rug pull the economy, they'd have to use a different tool because the short-term interest rate is just not that tool. But Trump wants a 300 basis point cut, the highest cut ever in Federal Reserve history. And how will the long-term rates interpret that? They'll interpret that as weakness. So that crashes bonds, which is inverse to yields, and the rate that the government needs to pay will go up as well. And so we'll keep watching that 10-year Treasury and 30-year Treasury. Another thing that happened while we were watching this is that there was an announcement that the US Treasury bought back approximately $4 billion of its own debt. So the issuer of the world reserve currency, the Treasury, is basically in the market to buy back its own IOUs. Now, this is what was done under Janet Yellen, under the Biden administration, as well as what's happening under the Trump administration. So they're following the same strategy. But what are they doing with these $4 billion buybacks? Basically, the Treasury has been buying back their longer dated maturity by issuing shorter dated, more liquid maturities. What does that mean? That means they can leverage up. There's deeper liquidity, and those may be the very same instruments that they could use to back up their stablecoins in this fiscal dominant strategy. It's basically what Trump needs in order to get the rates down, but just to inflate away the debt, but it doesn't impact the long term. And so this is just the same refinancing, everything moving towards the distressed market strategy. It's got nothing to do with inflation or employment, which is what the Fed's meant to be focusing on. But if you get a rate cut, it is because of the fiscal dominant strategy, which again is removing that dollar independence. This is the Fed losing power, but it was the banks that were always in power or anyway. Essentially, this could be stablecoins being issued closer to modern monetary theory. And that modern monetary theory could be done under who's likely to be the 2028 president, who's being prepped to be the 2028 president. Well, that's J.D. Vance. And who's J.D. Vance backed by? Well, he's backed by, while they're backing it by J.D. Vance is backed by, he's Peter Thiel's guy. And he was the guy that was brought up and kind of groomed to be the president under Peter Thiel. Does this not look like the technical industrial complex having stable coins, more military industrial complex technology, cybersecurity, artificial intelligence, drone integrations, at the same time as taking shares from the financial industrial complex? So this, I believe, is a BlackRock portfolio rebalancing based upon the reality of how it is right now. Now, they can continue to use the Fed balance sheet, so quantitative easing, or they can continue to use the $3.5 trillion of reserves that can now, through the Genius app, be used for stable coins. And so essentially, they can use negative yielding stable coins because inflation will go up and there's no amount of yield that's going to compensate for this as well. And so it's a disaster investing in government bonds at these stages, which is why they have to pay an ever-increasing higher result of it. The government is taking more and more power while generating more and more revenue, while increasing the trade deficit, while increasing the trade budget, while increasing the debt ceiling, while becoming a bigger and bigger and bigger monster. And who's receiving all the money? Crony capitalism and the proof of weapons network. This is completely in line with the proof of weapons network strategy. And who's going to be likely the 2028? I'll say it right now. In my forecast, I did, if you go back through my channel, I believe that Trump was going to win. I then said it was Biden, and then I went back to Trump. And I'm now thinking it's going to be J.D. Vance in 2028. Vance is Peter Thiel's pick. That is a technical industrial complex. If you look at Peter Thiel, if you look at J.D. Vance, he was given a fake military career. He was a journalist in the military rather than painting him as some, war hero. He was also a fake venture capitalist because he was funded through the venture capital industry by Peter Thiel, given a role with Peter Thiel's VC fund, giving a fund to run. And then he has this background, which was fully backed by Peter Thiel. And he's also basically he was always given this, this fake political rising to being the vice president. I think he's being picked for the 2028. And I think he's the perfect category for 2028 being the surveillance state, the police state, based upon all of the policies that the Trump administration has been implementing. Inflation is the cost of fiscal dominance. So everybody needs to prepare for higher inflation. It's above 3% now. And I think it's going to be structural above 3%. But everything leads to more inflation, more manipulation of numbers. And what is the cost? Inflation is the cost and surveillance is the cost. The beneficiaries, asset price increases. So if you're saving in cash or you're investing in bonds, you'll be negative net losses. And you have to have assets which benefits Wall Street at the expense of Main Street that will be paying the additional price through tariffs. The other cost is the social credit score that I believe is coming. And and you can look at this basically. Kind of, we always have the phrase every accusation is a confession. Well, they're always accusing China of having the social credit score. Well, that's the same thing that I think is coming to the US with these stable coins. And the only way to beat it is to own your own assets. What assets? It's got to be fixed supply assets. The ultimate fixed supply asset, I believe, is Bitcoin. And so Bitcoin in self-custody was why I wanted to play that video, and I'll refer you to my blog later as well. But wealth inequality only creates civil unrest, and that's why it needs to be held in self-custody, and that's why they want you to own it with them. There is no alternative strategy that I can think of, and they will carry this strategy on until the last bond is bought, and they're going to dump those bonds onto you, the American people, because less and less foreign purchasers are buying those bonds as well. And so that is the strategy of the Trump administration. Rather than the Fed doing the quantitative easing, it could be Treasury doing stablecoin quantitative easing. We shall see. We'll keep reporting it. But that is the world that we are transitioning to. Basically, Trump said he's going to make a huge announcement today. Maybe that's happened while we're going live. But after we had Jerome Powell's Davos speech, which will be framed as a capitulation, and then we'll see exactly what happens with the Trump speech, and I'll cover that next week as well, because it may be happening now or it may be happening after this as well. And follow me on X in case you want real-time financial updates that I do on a daily basis as well. Now, we've been talked about how stable coins could lead to dollar dominance globally. There is obviously a massive resistance against that, because America retaining its world reserve currency is more of a victory for the military industrial complex, because dollar dominance means more war. And we've got to get to multipolar world, which is what I think the financial industrial complex wants. And that's why BlackRock is investing in the multipolar world order, but the military industrial complex may want dollar dominance. So that might be the power struggle between the financial industrial complex, military industrial complex, and of course the technical industrial complex, which is being the beneficiary of some of the power of both of those. And that's the type of struggle that we'll be watching as well. Now, speaking of the multipolar world order, let's have a look at some of the things that are happening globally while there is this debt rollover strategy within America and the debt crisis. Russia says that it will keep selling its oil to India, whether there is sanctions or whether there's tariffs or not. And so sanctions are proving that BRICS can still trade together local currency no matter what happens, whether there's tariffs going to be threatened, is drawing them closer to each other rather than anyone capitulating. US imports from Russia went up in 2025, 25% this year. Oops, they don't want you to know that. And yet they're coming after India, even though the US is actually importing more from Russia and European Union is doing the same. So it's a massive hypocrisy when you understand how it goes. India is now pushing closer and closer to BRICS as a result of the tariff threats as well. China and India, they're basically buddying up, challenging the US hegemonic complex, as it were, the US hegemon. The seeds were sown in basically October 2024. So Modi and Xi, they met at the BRICS summit. They were speaking, at that summit. They decided that the troops that were on the China and India border, they've been discharged, and they solved their border dispute. So that one was being resolved. And by 2025, direct flights resumed after basically 5 years of ceasing trade and flights. And now the travel restrictions have been removed between India and China. And basically the US tariff that was a threat from Trump, where they said they're going to imply a 25% tariff on India and then it spiked to 50% if they continue to work and purchase Russia. It basically, is among the highest globally, and all it's done is push China and BRICS and Russia all together as well. And so they said they're going to put a 10% to 100% tariff on any BRICS members, basically all pushing the multipolarity, which I believe is all in line with the BlackRock strategy as well. So India is now leaning further into China. China's now leaving further into India, despite the fact that we're told the opposite. And Russia is pushing basically the Russia-India-China talks is getting closer and closer, and they're coming back with unified front negotiation. A few more stats as well. India exports to China, they jumped by 16.4% by June 2025. That's a $1.38 billion that was done as a result of that. The rupee trade rises between China and India as well. So this is, making less trade in US dollars as well. The USAID sponsored media. I'm gonna push on as well for some of those stuff. I was gonna give a little bit of an update. I think I'll do this next week on the whole artificial intelligence trade war between China and US. Let me know in the comment section whether you'd be interested in that. I've pulled out some interesting stats. I think we've got to really follow that one as well. But Trump's role to strengthen BRICS, I think it's really happening. And I think the data, it would have been done under Harris. This isn't about Trump derangement syndrome. It will happen probably under J.D. Vance in 2028 as well. But I'll cover more upon that. There was a little bit of drama that I think is worth talking about as well, because all of this, I'll cover more on the chip war, the AI war as well. But they're looking to revive Intel. Intel had a bit of drama with Trump. Trump was basically saying the CEO must step down. He had a demand that the CEO, not CIA, Freudian slip there. The CEO must step down. That led to approximately a 50% crash since 2024 that culminated in Trump saying the CEO must step down. The US government is now saying that it will invest $8 billion under the CHIPS Act, and they're going to get a 10% revenue in the chips from NVIDIA as well. So this was part of the CHIPS Act before. Under Biden, there was a $50 billion budget. I think Trump was saying he'd like to get a 10% revenue share. And we're seeing more and more of these types of deals, like NVIDIA and AMD. If they export to China chips, the government or the Trump administration wants a 15% cut as well. So we're starting to just see this larger and larger involvement with governments into these corporations, but the revenue's coming through. And they're allowing them to do these increased trades that then lead to these negotiations as well. The condition was that the CEO steps down. And then there was an announcement that SoftBank is going to be investing $2 billion into Intel as well. But SoftBank doesn't really have that money. They would need to borrow that. It would need to be some kind of new refinancing. So it feels a lot like stock market manipulation. It feels like, really strange types of announcements that are leading to big corrections in prices, and I'm sure a bunch of insider trading. And to end all of this in the macro section, we got the announcement of all announcements, which is to remember all of that stuff that was happening with Klaus Schwab at the World Economic Forum. Now, obviously, these people have all sorts of allegations against them to have strategic leverage, as the Proof of Weapons Network has these, World Economic Forum organizations that pay their fees in order to set the world orders, the trades that they're going to be doing. It's a decentralized Proof of Weapons Network that sits on top of government and is able to use lobby money. They can redirect lobby money in order to reset these world orders. Well, the proof of weapons network CEO I call BlackRock at the moment, which is measured by the assets under administration being bigger than any of the other people. But they decided to announce, as Klaus Schwab was shamefully removed as they started to say all of these different allegations around, obfuscating money from the World Economic Forum for personal gains, employee disputes, sexual allegations, all sorts of stuff. They decide strategically when to release it. That's why these people are in these positions. But the World Economic Forum announced their interim chairman of the World Economic Forum. And guess who they chose as one of them? You guessed it. Larry Fink of BlackRock is now the chairman of the World Economic Forum, as well as CEO of BlackRock, of the largest contributor to the Proof of Weapons network that I believe is organizing many of these vassalization strategies in a decentralized network that meets at these World Economic Forum meetings and also provides the technology for all the fund managers, the advisory and artificial intelligence technology for the Federal Reserve, and the advisory and artificial intelligence data and technology for Treasury, while having board seats on 20,000 companies, resetting the world order, and having access to vast lobby funds and the ability to control capital flows through policies like ESG. And the Dutch East India Company, the British East India Company, it exists in this new form, and it's called BlackRock, and it's a proof of weapons network, and it doesn't have allegiance to any one country. There's no national agenda. It is a-national, and it sits above and both all of these different countries that are vassalized, lobbied, and therefore all of these countries just work for the interest and wage wars against sovereign countries so that they can try and vassalize them and securitize and financialize their economies. And instead, when they don't win those battles or win those wars, they end up in a negotiation just like we're seeing in the Middle East, and a negotiation just like we're seeing in Europe, as a result of BlackRock negotiating against Putin via Trump, and as a result of BlackRock negotiating with Putin via the European Union leaders, and a result of BlackRock negotiating with the GCC, while Trump administers via his proxy Israel a genocide to get leverage by killing children in order to get better terms on deals as the GCC negotiates with BlackRock. And so that's going to do everything for part 2 this week in macro. This is everything that's happening with the Fed becoming dead, needing new tools as we enter into this more dystopian future as a result of the Big Beautiful Bill, the Genius Act, and the fiscal dominance taking out monetary policy, while they both work for the banks when they get favorable policies on their stable coins, and they take Europe and the other vassal states with it, while we transition to BlackRock's multipolar world order when we follow the money, and we'll keep following the money. So if you're liking this content, this is a good time for you to subscribe to my YouTube channel. Put any comments of what you'd like to see below. We take the big live stream, we break it into 3 different parts. So there'll be this week in Bitcoin, this week in macro, and we're going to now move over to the third part, this week in geopolitics. Just before I do that, I was going to play an AI video on the ability to self-custody. Now, last week I played that in the Bitcoin section. I'm going to be doing it in the macro section because we had a technical issue, and I want to take a quick water break. But the way to protect yourself from these trends is to own Bitcoin in self-custody. So we can boycott the Fed. We don't hold it through an ETF, so we can boycott BlackRock. And we can get ourselves in a position where we beat the performance of their products. Historically, we can't give financial advice and promise it will happen in the future. But those that have done that have put themselves in a position of wealth where they don't need to borrow against their Bitcoin. because they can just buy their houses outright and various other things. And then they can direct the flow of their money by taking control of their money. And so with that in mind, I'm just going to play a quick overview video from a blog that I recently created. You can see the blog afterwards on basically a guide to self-custody. You can listen to the intro video. You can listen to this little overview of self-custody. Can get a little bit complex, but don't worry, I've got you covered. You can sign up to the Bitcoin Hard Talk membership portal, get a completely free 8-module training on how to self-custody your Bitcoin, how to set up hardware wallets, how to back it up, how to understand the different decision-making. You can take your time with it, watch it bit by bit, do it in your own time. And so make sure that you've gone to simondixon.com, checked out this blog, and I'll just play the AI summary, and then we'll wrap this up and we'll move into part 3 this week in GeoPolitics. Azad, if you could play the video.
Welcome to the deep dive. Okay, so today we're really getting into Bitcoin self-custody. Basically how you can actually control your own digital assets. Think of it as your path up the, what's it called, the staircase of sovereignty, moving from relying on others to, full control.
Exactly.
And we're drawing heavily on the insights from Andreas M. Antonopoulos, particularly his book, Mastering Bitcoin.
A foundational text, for sure.
Our goal here is pretty simple.
Yeah.
Let's help you understand the key steps, the things to think about for self-custody. It all comes back to that saying, right?
Not your keys, not your coins.
Yeah.
It really sums it up perfectly.
It really does.
And what's really fascinating here is how different this is from traditional finance. It boils down to whoever has the cryptographic keys, they control the funds.
Your keys, your Bitcoin. Simple as that.
If someone else holds them for you, they're the custodian. They have the control. That slogan, yeah, it just nails it.
So, but it's not just like a black and white choice. Either full self-custody or nothing, relying totally on someone else. Andreas talks about hybrid options too, right? Things like multi-signature.
Oh, absolutely. It's definitely non-binary.
How does that work, the shared control thing?
Well, hybrid multi-signature setups, or multi-sig, mean you can share control, maybe with a trusted third party, right, or even just between multiple devices you own, like your phone and a hardware wallet.
Okay, so it's a middle ground. More flexible.
Exactly. It offers more flexibility. And this brings up a really important question for you, the listener. Are you ready for that full responsibility? Or does some kind of shared control feel better?
Right. It's about trade-offs.
It is. Balancing risks and benefits, especially when you think about your own threat model, basically. What specific risks do you need to worry about based on your situation?
And security isn't usually just one magic fix, is it? It's more about layers of protection.
Always layers.
When we talk risks, I mean, they could be anything from targeted stuff like SIM hijacking all the way to, I don't know, floods or fires.
Sure, those exist. But what's the most common problem?
Yeah, what trips most people up?
That's the crucial part. While, yeah, threats can get really sophisticated, even state-level actors for some people, for most of us, the biggest risk in crypto is, honestly, losing access because of simple mistakes.
Like what?
Like forgetting passwords, misplacing your backup phrase, or just making your own security setup so complicated you lock yourself out. It really highlights why simplicity, where possible, is actually a security feature.
That point about simplicity is huge and often missed, I think. It kind of brings us back to the absolute core of it all, the keys themselves. How does Andreas explain what a key actually is?
He puts it very simply. A key is just a number, but an unimaginably large number.
Unimaginably large.
Think like astronomically huge.
Yeah.
The sheer scale makes it basically impossible for anyone to guess your key. It's effectively random.
Okay.
These massive random numbers generated by your wallet software are what you use to create your public address where people send you Bitcoin and, crucially, to sign transactions. That signature proves you control the funds.
But managing a brand new key for every single transaction sounds like a nightmare for privacy, right? Is there a way to handle that better?
There is, thankfully. That's where hierarchical deterministic wallets, HD wallets, come in. Big name, simple idea.
HD wallets.
They use a single starting point called a seed. Think of it like a master key.
Okay.
And from that one seed, the wallet can generate billions and billions of unique keys and addresses. The huge advantage for you, you only need to back up that one single seed phrase.
Simplifies things a lot.
Yeah.
Better privacy, too.
Massively simplifies backup and management, yeah, and enhances privacy because you're not reusing addresses.
And the seed, that's usually shown as the mnemonic phrase, isn't it? The list of words.
Precisely. The seed gets converted into a sequence of typically 12 or 24 ordinary English words. Much easier for a human to write down and handle than a giant number.
But easier to mess up writing down.
Well, the order is absolutely critical. Get one word wrong or in the wrong place, and it's useless.
So storing that phrase securely is paramount. Is just writing it on paper good enough? Or should people be thinking about, more durable methods?
Paper is simple, and it works for many. But yeah, for real long-term protection against things like fire or water damage, people often recommend engraving the words onto steel plates or something similar.
Okay, metal backups.
But the absolute golden rule, no matter the medium, never, ever create a digital copy. Don't type it into a computer. Don't email it. Don't store it in the cloud. Don't take a photo of it. Strictly offline.
Strictly offline. Got it.
And critically, make at least 2 copies. Store them in 2 different physically secure locations. Think geographic separation if possible.
Right. Redundancy is key there too. Okay, so beyond single keys and seeds, we mentioned multi-signature schemes earlier. That sounds powerful for sharing control, or even just for one person managing, say, a phone wallet and a couple of hardware wallets.
Very powerful. It adds significant layers of security and control options.
So what's the most important thing for someone to keep in mind if they're setting up their own multi-sig, especially around control?
Yeah, multi-sig schemes are often described as K of N, meaning a transaction needs K signatures out of a total of N possible keys to be approved. A common setup is 2 of 3.
Okay, so any 2 keys out of the 3 designated ones can authorize sending funds.
Exactly. This gives you redundancy. If you lose one key, you can still access funds with the other 2, or it allows shared control. But the absolutely crucial point for you, if you're setting this up for self-custody, is to ensure you personally hold enough keys to reach quorum.
Quorum being the minimum number needed, like 2 and a 2 of 3 setup.
Correct. If you set up a 2 of 3 and you only hold one key while a third-party service holds another and maybe a lawyer holds the third, well, if that third party goes offline or becomes uncooperative, they hold one of the keys needed for your quorum.
Ah, so they could effectively freeze your funds.
Potentially, yes. It undermines the whole point of self-custody if you can't act independently. So make sure you control enough keys to meet the quorum requirement yourself.
That makes a lot of sense. It comes back to control.
It always comes back to control. And as we sort of wrap this up, it's really helpful to think of self-custody like Andreas frames it, that journey up the staircase of sovereignty.
Step by step.
Exactly. It's about building your comfort level, your technical understanding piece by piece. Maybe you start with a smaller amount on a phone wallet, a so-called hot wallet, before you think about moving larger amounts to cold storage, like a hardware wallet or that steel plate backup.
So you don't have to jump straight to the deep end.
Not at all. And what's fascinating is, even if full hardcore self-custody isn't your immediate goal, just understanding these concepts is vital, especially things like proper multi-factor authentication, moving beyond insecure SMS codes, for instance. That's crucial for managing any digital asset safely.
Yeah.
So it leaves a question for you listening. Considering your own specific circumstances, your own risk tolerance, what's maybe one small actionable step you could take, maybe even today, to move a little further up that staircase, to enhance your own digital sovereignty?
And some practical to think about.
Yeah. And of course, for anyone who wants to dive even deeper, the original creator of much of this thinking, Andreas M. Antonopoulos, has a wealth of resources available, online talks, books, articles, definitely worth exploring further.
Okay, awesome. And the one action you can obviously take is you can head over to simondixon.com and you can sign up to the Bitcoin Hard Talk membership portal, where you will be able to access all 8 modules to self-custody your Bitcoin completely free. And I know that was a lot to take in. It was designed for me to have a little bit of a break and to help you understand. You weren't meant to take all notes there. You can if you want, but we got much more in-depth content. It's something that everybody needs to do in order to learn how to self-custody your Bitcoin so that we can drain the swamp and protect ourselves from the proof of weapons network with peaceful proof of work. So just before we move over to part 3 this week in GeoPolitics, remember that if you can subscribe to this channel, if you're enjoying this content on YouTube, if you can follow me on Rumble, if everything goes bad on YouTube, we hit 100,000 subscribers, and they sent me our little silver plaque. So thank you to everybody. Our next goal is 210,000 Bitcoin. 210,000 subscribers in order to commemorate Bitcoin. Maybe we can get to 21 million one day, one subscriber for every Bitcoin. Big ambitious goal. If you prefer, you can watch and download on Apple Podcasts or Spotify, so that you can listen to this at the same time as going to the gym and driving or whatever you do. And everything will be backed up on simondixon.com in the Bitcoin Hard Talk membership portal with all previous episodes, a free digital copy of my book, the Self-Custody Bitcoin Guide with Andreas Antonopoulos, and some other things for you, like the Great Depression of the 2020s video series. And so we can share this journey of transition to a world of AI, Bitcoin, and central bank digital currencies. Now, we have one more section for you. So we're going to be going through part 3 of Bitcoin Hard Talk, episode 94, Is the Fed Dead? And this time we're going to be going through the Trump and Putin negotiations, the prospects of peace, and what it means for Europe by following the money. So let's move over to part 3. Welcome back to Bitcoin Hard Talk, episode 94, part 3. This week in geopolitics, we're going to be discussing the meeting between Trump and Putin in Alaska and what it means for the European Union and the prospects of peace by following the money. And we'll take a look at the other conflicts in the world so that we can see how we progress this week, so we can try and push forward. So what happened this week? Well, the headlines were dominated by the meeting in Alaska. That meeting was brokered and expected to be only between Putin and Trump, but it actually had a bunch more people there, more representative on both the Russian side and the US side. And at the end of it, you had some public comments from Putin, where he said a few things, and from Trump as well. So we'll go through that meeting, what it actually means, what was said. And it was followed up by another meeting. Right after the meeting, or during the meeting, Trump said that Zelensky was also spoken with in a late night call after the meeting. So Trump spoke to Zelensky, and that was also done with many of the European leaders, including the NATO Secretary General as well. So all of the important players. This led to a meeting on Monday this week, which was after the Friday meeting last week, which was between the EU leaders, Zelensky, and that happened in the US as well. So obviously Putin wasn't there because of the arrest warrant by the International Criminal Courts, the same one that Netanyahu is meant to be upheld to, but he gets to go to the US because of that hypocrisy for his crimes against humanity. So in the meeting on Monday, there was Zelensky, there was von der Leyen from the European Union. There was Merce, a puppet for the Proof of Weapons Network. All of these are puppets for the Proof of Weapons Network. Zelensky, who represents the military-industrial complex, not the Ukrainian people. Von der Leyen, who also represents the Proof of Weapons Network. Merz from Germany. Macron from France. And Stubb from, I think, Finland. Mieloni from Italy. And, of course, Starmer from the UK, a big Proof of Weapons Network pundit. And Rutte from NATO, is that one? The United Nations as well. So prior to the meeting, Trump said that any failure to reach a peace deal with Putin would have economic implications. There was threat and posturing going into the meeting. And then after the meeting, he said he would likely prioritize buyers of Russian oil in terms of threatening people that buy Russian oil, including China. So there was threats at China if talks were going to be would fail. And now after the meeting, Trump said, "I don't think I have," quote, "I don't think I have to think of possible increase in tariffs on China after the meeting. So here were the initial takeaways from the meeting that I took away. It was pretty uneventful, and it was followed by two-way narratives. Those on the left were saying epic failure. Those on the right were saying epic victory. So you got the whole partisan thing. But let's take away a few of the things that were said. So Trump said the meeting with Putin was a 10 out of 10. Best meeting in the world. We're reshaping the world, obviously taking the victory lap, even though virtually nothing of substance was announced. And then the second thing is Trump says that one of the two significant items remain unresolved. So it was making out like pieces around the corner, but there's one or two of the significant items that haven't been resolved. Trump says that Zelensky will visit US on Monday. So that was the meeting that did happen. And then Zelensky said that he had a 90-minute call with Trump. So that was confirmed as well. Zelensky said that Ukraine is ready for, constructive cooperation. Zelensky notes that there were positive signals from the US on security guarantees. Also, there was no comment from Putin or the Kremlin so far confirming whether there would be a peace deal. Putin confirmed that war would not have, this one Trump loved. Putin confirmed that war may not have happened under Trump as it did for Biden. So obviously Trump's big win has always been to say, this war would never have happened under me. This was a Biden war, and I inherited it. And obviously his campaign promise was to resolve it within 24 hours. When he didn't resolve it within 24 hours, he said he'd resolve it within 100 days as per the Kellogg plan. When it wasn't resolved under 100 days, we get these further walk back from that. Of course, it was Biden's fault, and I just inherited this as well, which is an element of truth. But we know this is unipolar. The governments aren't the decision makers. This is the proof of weapons network. They engineered the NATO expansion. They did the military coup via the CIA in 2014. They did NATO expansion, and they did the escalation of the war that led to the invasion of Ukraine. I don't call it a special military operation. This was no doubt an invasion, but this was based upon breaches of NATO expansion, just as if there was expansion by China or Russia in Mexico, it would lead to the exact same situation. But this was a war for the proof of weapons network to vassalize Ukraine and Europe, make sure that European Union was dependent upon America in order to allow BlackRock to purchase more and more assets on the cheap for the proof of weapons network. So now the European Union has a basically 47.60 cap on Russian oil prices, which means that they don't want, it helps China basically, but the European Union has those oil caps, and they're trying to make sure that the oil is coming from America, and the natural gas side, which is why Nord Stream pipeline suddenly blew up. But removing this cap, if we were to look at the impact, imagine the negotiations led to the removing of this cap, that would likely send oil below $50. And that can have an impact on inflation. And so while we're moving, as we covered in the macro section, to this post 3% environment and increasing inflation, if you could get peace, then it could lead to a decrease in the oil prices, and that would be relieve some of the inflationary pressures as well. And so in anticipation of peace deal, the market kind of had a correction in the oil price. So it was speculating on whether peace would happen. I covered in all of my coverage of this that I don't expect it to happen. Why? Because we follow the money, and we know there's a lot more money to be made in war. And this is part of the BlackRock vassalization strategy that I personally believe leads to Russia gaining more and more territory and more land, while Ukraine is forced into negotiations with the proof of weapons network for wheat, oil, rare earth minerals, and various other things. And Europe is going to get weaker and weaker and weaker. And this strategy is working. BlackRock's getting what they want. Vassalization strategy is working perfectly. Russia's getting what they want. And so there's no incentive to this move towards peace, because there's lots more money to be made by the proof of weapons network at the expense of the European, average American, and Brit as well. And so if a peace deal did happen as well, wheat prices could fall to basically a 5-year low. There was big inflation, food price inflation, plus oil price inflation, and oil produces, is the input cost of all the producers, all of the trucker industry. And so obviously as the producer price index goes up, that can lead to consumer price index of goods as well. Ukraine exports grains to essentially nearly 400 million people worldwide. So if that was able to be turned back on, that could have an impact on wheat prices. Food inflation has been a real problem, and it's been really elevated as a result of the Russian invasion as well, because that led to declining Ukrainian grain exports. So the market was speculating around peace and the prospect of wheat prices coming down during the war, or the prices that went up during the war, sorry. And so according to the Fed put out a couple of announcements as well. They said that the war added up to 2% to global inflation. So in an environment of 3%, this could correct it down to 1%. That ties into many of the things we were talking about in the macro section, which is why I saw zero prospects of peace from both the financial industrial complex, the technical industrial complex, and the military industrial complex departments of the proof of weapons network. But if it were to lead to the reversal of sanctions on Russia, we would see one of the basically Russia's one of the most sanctioned countries with Iran in the world. And so it would be very stimulative to the economy. It would combat oil price inflation, and we'd expect the market to see that. Now, the bond market was pricing in speculation on this leading to peace. The oil market and the wheat market were all doing that as well. So the market was telling us that this might lead to peace. But me following the money, I think that was market manipulation, because those really in the know that there's no prospect of peace. I would be very surprised if this actually did lead to peace, because of all the monetary reason and the power dynamic game that I covered earlier. It would also expect, if we did move to peace, that Ukraine would ramp up exports. And so global inflation would likely, fall to 100 basis points. The market basically started to really price in this potential peace agreement. And then it corrected for approximately 5 days after the meeting. And then based upon the Fed meeting, we had a bit of a correction today. So it was all in line with kind of other types of market forces as well. Ukrainian bonds, they jumped up sharply since the Alaska meeting. And so, since that meeting was announced, the cost to the bonds price came up. And so the rates were factoring in the inverse as well, that they may be moving towards peace. And basically, Trump was meant to be backing a deal with Russia to have Russia have full control of Donbass, and that was going to be in exchange for complete peace with Ukraine, which obviously Russia has always said the three things that are important to them in getting towards that, and that doesn't get towards that. So I think we've got another merry-go-round of distraction, market manipulation, false hopes, and a big lose that in the end weakens the dollar, which is the strategic goal, I believe, of this. Eventually, Trump may get what he wants, but this one is incredibly hard because this is a genuine battle between a sovereign country, Russia, and the proof of weapons network that BlackRock does not control. And so this is all about a real battle, territorial battle between the sovereignty of Russia. Ukraine is a vassalized state for the proof of weapons network, and the military-industrial complex event that will eventually lead to financial industrial complex and technical industrial complex rebuilding once they've exhausted all the profits for the military industrial complex. So as part of the agreement that was floated out there, Trump's easier, he's more blatant about it. It said that Ukraine will promise to buy $100 billion of American weapons, which will be financed by Europe. So the European Central Bank will print it. NATO budget increases. That's weapons. They get their GDP print. They get their growth. And this may be financed through some in-depth financial complex as well. UK has kind of been the piggy bank through the International Monetary Fund, and the International Monetary Fund is, one of the largest creditors that Ukraine owes money to as well. And that would lead to US security guarantees. So basically they say security guarantees means Europe print money, create inflation for your people, buy more weapons from us, and then we get to negotiate deals for our companies. And that's what essentially the deal looks like when you follow the money. So my analysis, as I've been covering for the long term in Bitcoin Hard Talk, is this would be very good for US corporations, disastrous for Europe, and that was always the goal. That's why Nord Stream pipeline blew up. That's why NATO and covert wars happened, in order to get the aggression. And America and Europe were always meant to have Europe vassalized into America, American corporations vassalize more of, more of America, and the proof of weapons network benefit, which creates inflationary forces and the destruction of the European economy, so it can be purchased for pennies on the dollar. So great for American companies, bad for Americans, disaster for the European Union all around, great for BlackRock, great for the vassalization project. And it's really not about peace. It was all about deal making. It was not about peace. So the narrative is defending democracy, Putin is Hitler, all of that different stuff. But this is just straight up proof of weapons network 101 strategy. It's about money. So follow the money, and you don't need to be fools. There was announcements as well. It says Ukraine has been completely destroyed in terms of some of the oil pipelines. And so this happened during the negotiations. So the transfer of oil from Russia to Europe has been now suspended indefinitely, allegedly. But there is also the trade routes that are still happening as well with the LNG. But just to put some of the numbers to it, between 2020 and 2024, US weapons exported to EU tripled. And so leading up to the 2022 invasion, it was almost as if it was known to be happening. After the invasion, 2022 to 2024, this was a tripling of the purchases of weapons that happened between 2015 and 2019. 2014 was when the US executed the CIA operation and the overthrow of the Ukrainian government. And then leading up to 2019 is when Zelensky was installed as a puppet government for the proof of weapons network with a mission to get as much money as possible for weapons sales and fight till the last Ukrainian in a war they could never win that would weaken Europe and end up giving more territorial gain to Russia and strengthen BRICS. Classic BlackRock portfolio strategy. Basically, this completely boosts the demand for arms in Ukraine. That is funded by the IMF, UK economy, excessive debt, and is guaranteed by the land. So now the US holds 43% of the global arms exports, with approximately 35% going to the European Union in that period. So this is a US proof of weapons network game, and EU is paying the bill. 2024 US arms transfers, they hit $117.9 billion from foreign military sales alone to the US proof of weapons network, and that was a 45.7% increase. So the cycle of the war absolutely benefits the US military industrial complex, while decapitating European stockpiles so that they're strategically weakened in order to spend more and increase their NATO budget, and makes Europe not independent with a bunch of puppet governments based upon political interference to usher in the spending of this money. And that's why everyone's angry with their leaders in Europe. That's why everyone's angry with their leaders in the UK. So all of the leaders across the European Union, they're pretty much US proof of weapons network puppets. I mean, in 2024, we had the Biden administration. They highlighted the Russian TikTok interference, leading up to the the basically Romanian selected puppet government and the president, which was Runov. So this is basically a US backed coup in a neo environment to basically block any anti-NATO type of forces or any type of candidates that would stand against that. Like, let me make sure I get the name wrong. Kalin Georgescu. Sorry if I got that name wrong. Which especially had some suspiciously timed leaks in order to make sure that the US puppet got in. There was meddling in France and Germany. In France cases, there was the 2024 basically snap elections that all of a sudden happened. We had the snap elections in UK as well. US officials funded the pro-Ukrainian movement. We had USAID funding that was exposed to Ukrainian media. We had the interference in the French elections against any type of, anti-Russia campaigns and various other things. Macron was the selected candidate. Many people have exposed his compromises, his strange background, many of the relationship with his wife, all sorts of stuff that have been covered. I'm not going to go there right now. In Germany, there was basically the US pressure via the Atlantic Council that interfered in the coalition talks. And this is when we had, the German leadership, the ones that are more aligned on an anti-China policy sanctions and the energy policy that led to the turning off of the nuclear energy, which destroyed Germany, which destroyed Europe, which led to this predatory EU-US deal for BlackRock portfolio companies, the decoupling of European Union and Germany from Russia and the cheap gas that was required in order to facilitate that. And under US pressure, the EU basically adopted many of the anti-China policies, which stopped them getting access to the cheap goods. As they Washington entered into the trade war. This is forcing many of the de-risking and sanctions at the expense of the European economy, which is full vassalization, full puppet governments. Basically now the European Union officials fear, or they're giving out different narratives that they fear rivalry that will turn European into a battleground if they don't do what US says. And by US, I mean vassalized by the proof of weapons network. And the proof of weapons mafia is essentially threatening escalations through financial warfare if NATO and America don't put up the cash, and Europe can become an expanded battleground if they don't divert trade away from China, away from Russia, and over to America, which completely destroys and harms the European economy so that BlackRock can purchase assets for pennies on the dollar and force privatization over nationalized assets. And there's no concept of sovereignty or nationalism at all. If they want a really strategic weaken, I've talked in the past about the destabilization campaigns of open borders, fueling narratives of pro-nationalism, far-right, white supremacy narratives at the same time as fueling Muslim invasion narratives, at the same time as funding pro-immigration, anti-immigration, mass deportation, rival up the religious, racial narratives so that you can get the destabilization campaigns and usher in the surveillance state and police state of the technical industrial complex. That is coming to America, by the way, beta tested on UK and Europe. So in 2024, the US was basically the largest partner for European Union goods exports, 20.6%, with $319 billion in service exports, but $109 billion deficit. So it's a market, and this is why we have this tariffs and this narrative. The EU's ripping us off, but we end up with just massive deals like we covered in the macro section. Apparently, 5.2 million EU jobs, which is 2.4% of the total, depend upon US exports. And so after 2022, US energy surpluses grew. This is locking in a massive dependency. And so US's corporations and the proof of weapons network are absolutely the beneficiary of this. The projections are saying that by 2028, the EU will purchase the $750 billion. We covered more of this in the macro section in US energy and $600 billion in investments under the 2025 tariff deal that Trump and trade deal that Trump announced this week. There's problems with that right now, but essentially that's how these deals worked out when you have no sovereignty. I always get the comments of people saying it's sovereignty, not sovereignty. My mouth always wants to say sovereignty. So essentially, US corporations drain European resources, talent, and any autonomy, and any of these battles against Russia and China. Europe is a tool. And then the narrative is that Europe is a bad partner ripping off America. When you follow the money, when you understand the proof of weapons network, when you understand strategic investment equals control, when you understand vassalization, when you understand the deep state and the tactics and the profits of war, you just get the exact opposite of everything that's being told. So speaking of exact opposites, let's cover the final battle because we know the reason I believe we can't have peace right now is because the Middle Eastern side, I believe, is going through the next phase of rebuild and financial industrial complex and technical industrial complex instead of military industrial complex, because the proof of weapons network needs to make up for the lost profits in Europe. So in the Middle Eastern side, while it looks like chaos, I'm seeing unification on a scale that we haven't seen before, but also I covered last week all the things that are happening to Israel and in the region that never, ever would have been able to happen before. So let's take a little bit of a look at what things have happened update. So the traditional role of Israel, as a recap, or those new, is that it's always served as a conduit for US military industrial complex funding. Now, most people would say America doesn't benefit because they think of America as nationalism and the people. But America, as you know, is vassalized into the proof of weapons network and US corporations. And so the role of using Israel as a tool to funnel taxpayer money, printed, sent to Israel, and then the wars lead to massive contracts for US military corporations, is really been shifting over to Europe. That model is being applied in Europe, as I just covered. The global economic power dynamics, I believe, have fundamentally changed within the Middle East. And so I believe the US proof of weapons network, by following the money, is abandoning its old nationalistic model and ideology frameworks and replacing it with global frameworks headed up by BlackRock that wants to negotiate with Gulf countries that have the money so that they can invest in the global South that has the demographics and the children, basically because the birth rates are plundering in Europe, UK, Israel, America as well. And so they have to turn to the global South. And so US becomes the host country for the capital markets, but it becomes vassalized, as I've covered many, many times. So this includes the traditional military industrial complex model for the Middle East, which was to fund Israel, perpetuate the Zionist ideology, and cover up for Israel so that it looked like it was a safe place for the Jews so that they could recruit an army that would then engage in the ethnic cleansing and the complete destabilization of the region and profit from forever wars and stopping the Middle East from unifying and competing with America as a global hegemon strategy. And so what I believe is happening, as I said, is we're moving to those lost profits are now going to be for the rebuild, financial industrial complex, and surveillance, technical industrial complex. But they're competing against sovereign deal and the various Saudi deals that are happening as well. But now I think the Middle East is moving towards decolonization by aligning with BlackRock and the proof of weapons network, by aligning with finance side and being able to go through a financial industrial complex agenda. That it marks the end of what I call the post-World War II era, the petrodollar, the death, destruction, violence, funding, militias, ISIS, Al-Qaeda, Zionism, all these different Western funding and destabilization campaigns. And that also marks the end of Israel being a good investment for the proof of weapons network. And so that was the military industrial complex model was heavily reliant upon Israel. So in order to make that transition, remember the proof of weapons network is not a monolith. It's different competing powers that invest in each other. The military companies also hold shares in the financial companies and banks so they can hedge, but they also want as much profit to be squeezed in order to meet their goals and drop as many bombs as possible. So Israel's utility is basically, it used to be the pretext for stealing American taxpayer dollars and using it to pay for American weapons, which helped the companies. But you needed a narrative, a religious ideology, and Zionism was that perfect ideology. You could radicalize the evangelical Christians, you could demonize the Muslims as trying to attack, and you could radicalize Jewish Zionism into the trauma of the Christian Jewish, European Jewish and Christian battles of the past. So you could literally put them in Palestine, and you could have a settler colonial mission, and you could radicalize Jewish ideology and Zionism and conflate it with anti-Semitism and all the accusations for anyone that talked against it. And we've seen that. But that's now being exposed. Last week, I called the blame shift operations, where narratives that would never be allowed are now escaping. Now, you could interpret that as more freedom of speech, or you could interpret that as factions of the financial industrial complex fighting factions of the military industrial complex aligned with AIPAC and the military lobby, whereas the financial and technical lobby, and you have these competing strategic narratives that are pushing through with these covert operations. But it was never about bringing, it was always about bringing more money to the American corporations and economy. It was never about supporting the American people or working on a nationalist agenda. But those weapon cells have now essentially moved over to Europe, and they can be pushed into the Asia-Pacific region by pushing the Taiwan is about to reunify or China invasion Taiwan narrative when it's ready. Too much to take on right now because America as hegemon can't handle multiple narratives. But the proof of weapons network can completely run all of the weapons in America to zero and get the rebuild contracts and then push to the next narrative as well. So order matters. So those contracts are all happening within Europe. And therefore, the military industrial complex changes its strategic focus. And Operation Blame Shift is what I covered last week. And so Zionism is being turned into a toxic asset. America's becoming increasingly isolated by being the last to back Zionism. And Zionism is connected to the crimes against humanity and everything that we're seeing right now. And now, suddenly, even though the starvation campaign and the famine campaign was there all along, we're now getting strategic, I believe, financial industrial complex sponsored United Nations pushes of the truth. And so what did we have this week? So the famine was officially declared by Gaza by the United Nations backed IPC, which has a very good reputation. And now they're recognizing it, the very first famine in the Middle East. When it hits famine, it means it can go viral and mass genocide can become a reality. So what we knew all along, while they were trying to pretend they weren't doing it and pushing out narratives, it's now been confirmed for the very first time in the Middle East. The last time this was confirmed was in Sudan in North Africa. And that was a genuine famine based upon poverty, but also political interference. But this is being classified as man-made by Israel. By Israel. That wouldn't have been allowed to be talked about before. Also, there was a leak from the Israeli Defense Force that showed the statistics of the crimes against humanity that were being committed. So all of those narratives on Piers Morgan saying we're the most ethical army in the world and all the gaslighting and all the, it's because Hamas is embedding them and using them as human shields and all that narrative. Well, now we get an IDF leak that shows 83% of civilians of the deaths, 83% are civilians. This was a classified Israeli military database that revealed this information. And obviously, they're just including the 53,000 that they've registered. And of those 53,000 Palestinians that have been killed in Gaza, only 8,900 of them have been identified as militants. So that is the 83% civilian. And we knew this all along. And we know the numbers are a lot higher. We know that Lancet did a study saying 400,000. We know that Trump said there were only 1.7 million Palestinians when before there were 2.3 million. We know that this is, and now slowly but surely, at the same time as Israel mass protests, at the same time as the cabinet being more fragile than ever, at the same time as recruiting reservists, which means you need the support of the Orthodox Jews within Israel that don't want to be a part of the IDF. All of this can lead to destabilization of Israel and turning it into an absolute pariah state for distressed acquisition. And I think led by the GCC and what's being negotiated by BlackRock, as I covered last week. So we don't even have the real data, but that's the leaked data. And meanwhile, we see the GCC basically preparing for what I consider to be the US decolonization, and deals with BlackRock that locks in the financial industrial complex into peace. But there's still far to go. We are still being told that there is a mass, they're going to be going back to the invasion and occupation in Gaza, going to be concentrating them into Rafah. And so those implied negotiations are still happening as well. Saudi Arabia and Syria, they basically announced their plan to do joint investment fund to boost they called it sustainable growth and development. They signed an investment promotion and protection agreement to support and safeguard cross-border investments at the same time as Saudi saying will pay off the World Bank debt. So that is US World Bank exit, GCC takeover, with Israel occupying certain territory, while Israel, which is a proxy for the proof of weapons network, military industrial complex, while US fraction of the financial industrial complex is negotiating terms via Trump. Saudi Arabia also Tabawul is also preparing for a Damascus stock exchange. So basically, Saudi Arabia is going to be supporting Damascus in a stock exchange launch in order to rebuild. Now, who's going to be the primary investor? Of course, it will be GCC regions that will then do those flotations. What does flotation means? It means financialization and securitization, which is probably where BlackRock comes in as well. So this partnership follows a $6.4 billion deal from the recent Saudi delegation visit to Syria. Egypt has begun a training of 5,000 Palestinians, allegedly, and this is police officers, which is in coordination with Jordan, and they're being trained as part of an effort to address the security vacuum within the Gaza Strip. And so that is according to Egyptian Foreign Minister Badr Adaleti. Sorry if I got that name wrong. So take it with a pinch of salt. This can either be what Egypt wants you to see to control much of the civil unrest, or it can be a preparation and movement towards the eventual deal with Jordan, Egypt, and the GCC being involved in the rebuild. Jordan reinstates mandatory military service for the first time in 33 years. This may be a flex, maybe to appease the people, but this is the Jordanian state-owned outfit, Petra News, that reported that. So take it with a pinch of salt, and that was what the agency report. King Abdullah II, that member went through the Trump humiliation ritual, and he appeased Trump by saying we'll be taking on some of the children, which they were already doing when they are in critical conditions. If you've been watching some of the footage of the amputations, the famine, the starvations, I watched just before this like a documentary on some of the journalists while they're being massacred, the ones that are left over that are able to cover some of this. It is devastating. It is going to be, when this is connected, I don't see how Israel recovers from this or functions again. There may be some state deals done, but I don't see any recovery. This is full pariah state. And US, when it comes to the September meetings where everyone is going to recognize Palestinian except for US, either that's going to lead to announcements or extreme isolation of US and extreme embarrassment and the dismantling of all international law as a result of this as well. Um, so yeah, King Abdullah announced that decision. And so now you have to do mandatory service in Jordan. This was abolished in 1992, and this was shortly after the signing of the peace agreement with Israel, where Israel invaded land, vassalized Jordan, agreed that it would take in Palestinians for relocation and ethnic cleansing, and then gave back some of the land, which was related to Egypt and Jordan having Gaza and West Bank, that now being reoccupied and renegotiated as they start to defy the colonization forces and the IMF by aligning with the GCC as a result of the alignment with BRICS based upon China normalizing between Saudi Arabia and Iran as the general thing. Petra News Agency reports the election itself was that the election itself was aimed at Israel because Israel talked about, for the very first time, by Netanyahu, the Greater Israel Project, which has traditionally been said that's an anti-Semitic conspiracy theory. But Zionism have always wanted the additional land as the ideological promise. And there was an announcement of mass settler expansion into the Greater Israel Project and expansion into the West Bank. This is turning Israel into the most hated country in the world, a complete pariah state. And because of that, we had further announcements from the Norwegian Wealth Fund that on top of the 11 investments through the other fund, the largest one in the world, Norway is going to be cutting 6 firms that will link with occupied territories in the West Bank and illegal settlements. Any investments in Israel are now down to 38 firms. That's worth $1.86 billion that they're reducing from the 61 that they had in June. So they're divesting. There are more sanctions. There are more boycotts from individuals. And then there are the neighbors are investing to occupy, own, and do based upon vassalization contracts as well. Contracts with 3 Israeli asset managers were also cut from managing the funds with the Norwegian fund. And there was an announcement from Hamas that they have accepted the new Gaza ceasefire proposal, which leads to Hamas not being a part of leadership, full return of hostages, negotiations with the Palestinian hostages, and that was completely moderated by Egypt and Qatar. And despite that, Israel is preparing for another ground invasion amid these massive, large protests in Israel to prevent the ground invasion as well. And US basically says that all 55 million visas, this is part of the gaslighting that's happening in the US. So all 55 visas of immigrants, legal immigrants in America, are now under review, but they're being under review for any anti-Israel protesters. So I see this as the technical industrial complex making the mass civil unrest campaigns, profiting with the financial industrial complex, and then a resistance from the military industrial complex, which historically has been aligned with Zionism and that type of struggle, and the portfolio management from the proof of weapons network going through as well. I think it's also worth pointing out, while all of these immigration narratives are being pointed out, that because birth rates in the West are at historic all-time lows, suicide rates are at all-time highs, drug addiction is at all-time highs, wealth inequality is at its extreme rates. Because of all of that, the only solution to the demographic issue is either increase the birth rates, which are not on that trend, or have more immigrants. And so because the immigrants are being tackled, open borders, mass deportations, that will strategically weaken both US, UK, EU, Israel further as well, which will push further vassalization into the proof of weapons network, but in the guise of a nationalist agenda that adheres to those type of nationalist narratives. And you can connect it to crime. Crime can then lead to surveillance state, police state, and that other benefit to the technical industrial complex. And so more civil unrest campaigns, the better. So this is the multipolar world order that I've been describing. This is everything that I think you need to know about what's happening this week in geopolitics. So as a review, this episode of Bitcoin Hard Talk, episode 94, this was, is the Fed dead? In part one, we covered the Syrian central attitude towards Bitcoin. We covered the strategy centralization of Bitcoin into Wall Street financial products and fighting back with self-custody, as well as everything else that happened this week in Bitcoin. In part two, we covered the updates on the Fed ending, fiscal dominance, any tools that monetarism still has, the stablecoin integration, the trends that are leading to vassalization by both the US and the European impact on that as well. All right, cool. We're still live. Sorry, I thought we had another blackout. We're wrapping up right now. In part three, we covered everything that happened this week in geopolitics with a particular focus on the Putin and Trump meeting and the subsequent Zelensky European Union meeting, and the continued vassalization project, and why I believe this doesn't lead to peace because of the connection to the Middle Eastern forces and what we're seeing in the pariah Israel state, isolation of America, and how that connects to the wider geopolitical issues with some of the numbers and following the money behind it. So always remember, while this is sometimes very dark, you are alive at one of the most interesting and exciting times in financial history. Stay up to date by subscribing to my channel, sharing this, putting a comment. We're over 101,000 subscribers, heading for 102,000. Hopefully we can get there by the end of this video. If you like to listen to this on podcast, so you can download it and break it up into bits, then I'm on, look up Bitcoin Hard Talk on Apple Podcast and Spotify. In case we get banned from YouTube, I thought we were actually taken down by YouTube in live today, but we had to do a rebuild. We were live the whole time on Rumble, so follow me over there. And remember to get your Bitcoin in self-custody guide, become a member of the Bitcoin Hard Talk membership portal completely free over on simondixon.com. And hopefully I'll put a link in the description to the self-custody blog, as well as you being able to head over to simondixon.com, go to the blog section, type in custody, and you will find that blog as well. So please do like, please do share, please do subscribe. We did a little experiment just before we close up where I did an interview on George Gammon's channel that has 16,000 subscribers, and over 120,000 people viewed the exact same video that we uploaded to my channel with over 100,000 subscribers. And I think we got 20,000 views, and that was based upon our audience and our shares only. So YouTube is not ranking because they don't want this message to get out. So I rely upon you to do that. So please do share. I read all comments. I'll try and reply to them as well. And let me know what you would like to see. That's going to be everything for Bitcoin Hard Talk, episode 94. Is the Fed dead? As we transition with peace, love, and unity. And I'll see you this time next week for Bitcoin Hard Talk, episode 95. Peace.